Yes,
Bang,
sir.
bang.
Welcome back to Rollup TV, episode number actually 62. Bang.
This one's titled The Bounce.
The bounce? What bounce? We're getting nuked on. What is Bitcoin at?
You and I are looking at two different things, buddy.
Are we? Where's BTC?
I see ETH above 4K. I see Bitcoin above 110K.
That's a bounce? Yesterday we were freaking out about Sol at 206.
It's almost there.
Oh yeah, I mean look at BTC, huh? I mean, those guys. I mean, so we were just talking about 𝘗𝘗𝗦𝗏𝗧𝗏𝗏𝑠 latest video. Shout out to Ben for showing the boys some love. Last clip. Basically, Ben still thinks that that Bitcoin's going to lead, and the Bitcoin dominance needs to keep going up. Bitcoin needs to make a new all-time high, and then Ethereum needs to make a new all-time high, and then we can really see a big push here. So that's kind of what I think we're waiting for, to be honest with you.
All-time high waiting room.
Although I guess Bitcoin could make an all-time high before ETH, but I kind of think ETH is going to go first. But we'll see. We'll see. We got a banger slate today. We've got the Superstate guys up first. Should be really good. Who else we got? We've got Messari. We've got Wyoming Stablecoin Commission, Galaxy, Enso, Mainnet. So
Enso, Mainnet, yeah.
Big slate today. Should be good. Man, that last segment with Vance and Michael yesterday was just purely just bull-tarded. Just absolutely bull-tarded.
Yeah, it was a lot of fun. A lot of good takes too. There's a general industry. I think this is the divergence. This is the final rotation. This is when
divergence.
Yeah, the final divergence of like left curve, right curve, risk on. Like we're gonna see people try to make it all back in one trade. We're gonna see like massive rallies. I mean, you're gonna start to see like these black hole vacuums that suck up liquidity because people are like gonna start chasing this big flaming ball of money.
Yeah, dude. Like what happened to humanity overnight?
What? Humanity went up. Look, privacy, AI, like
it's the AI meta, dude. I think AI is gonna get big here.
Comp, like humanity surged 175%.
Well, that's why I didn't want to sell it, dude. Because
the majority of the market was red.
Well, I mean, dude, the market cap of humanity is still only like the fully diluted. I think is like 1.5 bill.
Only 1.5 bill. That's right, and it's only 20% of WorldCoin's market cap.
Or 1.6 bill, and then yeah, WorldCoin is like
about 10 bill FDV.
Yeah, so
it's about 15% to 20%.
Dude, but WorldCoin was trading at 100 bill
FDV.
Like it was at $10.
Yeah.
It was at $11. It was at $12. It was at $120 billion FDV in March of 2024.
I mean, you got to think if OpenAI is 500 billion, what's the WorldCoin to OpenAI ratio?
I don't know, but I don't think it's freaking.
You don't think it's 1 to 5?
I don't think it's a fifth. No.
If you think about some like holding company that has both WorldCoin and OpenAI in its like portfolio,
yeah,
then you would think like, okay, this is a company that has massive distribution.
Yeah,
it has one of the primary leading AI. It has a chokehold on the AI market. ChatGPT's actually, I'd be curious what the most widely used LLM is. I want to assume that it's ChatGPT, but we don't have the facts and the data behind that. But I'd assume it's ChatGPT. And then you say, like, I think really it boils down to the question of how deeply integrated are WorldCoin and ChatGPT.
I mean, they're not really.
They have Sam Altman as like, I mean, dude,
they're not.
Your time horizons are just.
I mean, bro, WorldCoin is not integrated with Sam Altman.
WorldCoin is not affiliated with Sam Altman?
No, they're not integrated with anything with OpenAI yet.
Exactly. But we gotta like patience, bro.
Yeah, but I suppose that kind of goes back to what those guys were saying yesterday. Like if you're gonna buy something at 2 bill versus 200 or 200 versus 20, if you buy the more expensive thing, you're in a better spot theoretically. Also, those guys blew my mind with their hyperliquid targets of 500 to 1,000. I don't know what their time frame was, but it's definitely an aggressive target. So, guys, we got 𝗵𝗪𝗧𝗓𝗏, the co-founder of Superstate, one of the leading tokenization and RWA firms in the space. He's our first guest today. They've been doing a lot of really, really cool deals, notably with Galaxy recently. So, yeah, guys, we're going to get him up and start our show off after this wild weekend crash. Jim, welcome to the show.
What's going on, Andy and Robbie? How you guys doing?
We're surviving.
Yeah,
I mean,
the weekend.
Putting our necks out there with a little bit of a rumor mill, saying some funds got kind of washed out. Hopefully no bad karma comes back our way. But, you know, I feel like some of these projects need to know if their market makers are getting washed out.
Yeah, I mean, it's kind of interesting. I was in Dallas actually for an event last week and was sitting with a couple of buddies who at a large market maker, and the rumor mill was starting about them blowing up, and you know, they were still very much liquid, very much participating in the markets, and so I'm sure that there are some bodies that got carried out, you know, when you have a big deleveraging event like that. But yeah, we'll see what rises to the surface over the next few weeks.
Well, good thing Superstate is not doing cross margin 10x longs with illiquid collateral. I'll tell you that.
That's right. Yeah, no, we're trying to bring a lot more stability to the on-chain markets, you know, with some real world assets. But, you know, degens are going to degen. Even if you bring higher quality collateral, you still can't stop 100x perps. Yeah,
I mean, you guys are on the other side of the spectrum. Jim, I'd love to just get a bit of a background. Like, where did you come from? How did you find yourself to co-found Superstate with Robert, with some of the other team members? And then, yeah, you know, we had a bunch of things to go over today.
Yeah, I mean, TradFi refugee, like a lot of us that came into crypto, you know, investing back in the day with a lot of really smart guys, and then realized I needed to do this full time for a career. So I joined Compound actually back in 21. So that's how Robert and I got hooked up together. You know, there was an institutional business that we were running there. And so I came from, you know, very TradFi markets and decided, let's go do the crypto thing full time. And then, you know, we spun out about the end of 22 or early 23 to launch Superstate. So here we are, geez, almost, you know, 2.5, 3 years into it. And, you know, things are really firing on all cylinders.
Nice. Yeah, so you guys just recently put out this, you know, partnership announcement with Galaxy. Galaxy also just rolled out Galaxy One. But I think like the big concept that, you know, from the education perspective here is around the types of like basically tokenization that's happening. And, you know, I think that you guys have a pretty opinionated stance with regards to, you know, issuer-led tokenization versus synthetic wrappers. You know, so in the lens of this Galaxy collaboration, you know, why is it critical that assets, you know, that are going to be tokenized like Galaxy and Forward, you know, they are tokenized by the issuer rather than mirrored through some sort of wrap products? I think our community probably has a pretty good understanding of kind of like wrap Bitcoin, some of these other kind of like derivative products in DeFi. But I think it's a bit of a different story here with regards to issuer-led tokenization versus kind of like these synthetic wrappers.
Yeah, definitely. We definitely have a big opinionated stance on, you know, native tokenization, and, you know, Superstate works with issuers directly, whether it's our own funds that we bring on chain. So USTB and USCC have got like $1 billion in assets under management. Those are two funds that we manage in-house. And so when you hold the tokens, you actually own shares in the fund. You can move them around as collateral, or you know, they're backing a lot of stable coins, and like the reserves that are managed by the stablecoin are actually held in a fund that they hold tokens in. On the equity side, you know, very similar stance that we work with issuers. Ourselves are not the issuer in the equities world. Galaxy is, right? They're a publicly traded company, 15 billion market cap on the NASDAQ. When you want to buy Galaxy stock, you actually want to know that you have the same rights as if you were holding it on chain versus your Robinhood or your Schwab or Fidelity account. And so we do that with a partnership between us and Galaxy, so that any of the tokens that trade on Solana, used as collateral, that are swapped on AMMs, like those are all actually shares, same CUSIP that exists on the NASDAQ. So, you know, maybe someday Galaxy pays a dividend. You want to get that dividend.
Yeah,
Maybe
of course.
there's a big vote that you are, wanting to participate in. If you don't hold shares and you're holding, kind of a wrapper or a synthetic, you don't get those same benefits or rights as a normal shareholder does. So, there's a different spectrum for every type of investor on what they're looking to, put their capital towards. But, I think, longer term, you're going to see that native tokenization not only gives people like those rights, but it also allows us in the future to work with companies that want to go raise capital or do a stock split or like have other corporate actions on chain, that when you actually have that relationship with the company, then you get to like help them do other things in capital markets. And then the last thing I'd say on that is like, Galaxy doesn't want 17 versions of their shares traded on chain, like a bunch of different, liquidity fragmentation and different rights and counterparty risk and whatnot. And so you want pure, actual CA that Galaxy tweeted out, like go to their Twitter and like, you can like see it on Solana. And then you actually know that you're an investor in Mike Novogratz's company and not, some other like offshore SPV.
Yeah, man. I mean, we had Vance and Michael from Framework on yesterday, and they were talking about just generally when you're looking at this in a more kind of micro DeFi native scale, they're like, we've now reached a point in the market where things like actually doing really quality accounting and reporting of your numbers and your metrics and having that be public, having consistent buyback schedules, having consistent tokenomics, having governance rights. So they kind of like laid out like there's 3 forms of these tokens now. And like at the very top is like you as an owner of the token, let's call it hyperliquid in the sense you have governance control and that there's like programmatic, but let's call it buyback set in. Then you've got like one under that, which is like, okay, there you don't have the same level of governance control, but there is some sort of like programmable, open, consistent form of financial, policy or engineering happening. And then there's like one below that where it's just kind of like this governance token. You don't really know what you own. There's not really any sort of consistent schedule to any of the financial reporting or decision making, and it's kind of just all up in the air. And so that with that lens in mind, if we apply that to kind of where you guys are operating, which is like, I would assume the majority of the investors are literally only going to be wanting to operate at the top of that kind of totem pole, given their history and what they're used to dealing with. That makes this kind of concept of issuer-led tokenization so much more important for people that are actually going to be using these products.
Yeah, and I think like it gives either retail or institution to say, okay, it's 9:30 to 4 Monday through Friday. I could trade 𝘗𝘂𝘗𝑥 on the NASDAQ. That's awesome. Like clearly there's a lot of liquidity and, the market cap is massive for the company. But, I was actually looking on Twitter last night and there's an investor in 𝘗𝘂𝘗𝑥 that's like really pissed off at their brokerages because he like wanted to move his shares from Schwab to Fidelity because the haircut on margin was better in Fidelity than it was on Schwab. And like, you've got all these TradFi middle office people trying to move things around and like, you just get ghosted and like you actually can never do this because, by the way, nobody wants to let assets leave their ecosystem. But the beauty of crypto is you take those same shares on chain and guess what? If you want to put them in Camino, you want to put them in Drift, you want to like swap them on Orca or Jupiter, and like you maximize the utility for yourself as an investor. Like that's the beauty of tokenization when you actually own the assets, is that the use cases of what we love about other random coins on chain is like now being applied to $60 trillion equity capital market that is going to give people like more reason to go on chain.
Yeah, I mean, this whole 24/7 thing is it feels like we were trying to be more like TradFi for the last couple of years in terms of like the blockchain industry, and then now it feels like the tides have shifted where it's like TradFi is becoming more like how crypto has been, with 24/7 instant settlement with stablecoins, et cetera, et cetera. Rob, did you have something?
Yeah. Jim had some tech hiccups, but all sorted out now. I wanted to think about what this looks like at scale when we have multiple companies doing this. It feels like we have these untapped pools of liquidity. If you start on chain, you have something untapped off chain, and vice versa. Is this, do you think, going to become common? And what does it look like as it becomes more matured and it reaches scale? Is it one unified pool of liquidity that we're always tapping into? Is it like a toggle feature that brokerages implement to sort of switch back and forth between on-chain and off-chain iterations? Ultimately, these become one and the same, but how do we get there?
Yeah, it's a great question. I mean, I think the progression is, start with origination or like creating the assets, right? Like do it in a way that allows the pure native to be recorded directly on a blockchain and held by anybody in a wallet that's at their MetaMask, Phantom, Anchorage, Bitcoin, it doesn't matter. Like that infrastructure is now, is alive today. The like second phase of this is the utility side. And like in the next couple of weeks, like, stay tuned with all of the shares that we're bringing on to stuff to come, Mask, and do cool things. I think that's like, two very separate parallel worlds that exist for a very temporary period of time until the worlds converge and the interoperability becomes, abstracted away. And so, whether it's like you open up a Robinhood account and you like, I want to go sell this stock, it's 9:30 to 4. So like Robinhood's going to route that order to the NASDAQ. And then it's like, 5:01 p.m. or it's a Saturday afternoon and like Trump is tweeting crazy stuff. Like, I want to sell my stock. Like that's going to go on chain to a liquidity market. And, a couple of weeks ago, like the NASDAQ did a proposal to say the same order book, if the shares have the same rights and benefits in a tokenized form as they do in a non-tokenized form, like the order book should be able to aggregate non-tokenized shares and tokenized shares. And so I think you're going to see a lot of the like legacy institutional businesses really allowing these shares to work inside of the existing system. It's just going to take time for those two worlds to like reconverge. So there's a little bit of an unbundling in a parallel universe until, you can bring them all together. And I think the key part of that is like regulation and compliance, which like, is a necessary part of capital markets. It's why everybody loves the US. We have an SEC registered transfer agent. And so, we make sure that all of the ownership and in the integrations, because we came from Compound. So like when you integrate securities into Aave, their Horizon market, like our funds are in today, like there's a lot of work we did with Aave to make that possible. We're doing the same thing with AMMs and perps and you name it to make sure that like they're compatible with DeFi to give them, compatible with securities to allow DeFi to scale.
That essentially was my follow-up was, is this an engineering problem or is this a regulatory problem? And it sounds like it's a bit of both. Are we there yet where we have the regulatory clearance to say, because we're getting there with stablecoins, right? Genius Act is essentially fungible with real dollars and bank accounts. Are we there yet with securities to say a tokenized form of an equity is fungible with a registered brokerage security?
Yeah, I mean, pull up 𝘗𝘯𝘵 on Jupiter or on SolScan, and that's the same shares. I mean, like, maybe doxing myself a little bit here, but like I moved my shares away from Fidelity that I owned in 𝘗𝘯𝘵. I moved it on chain and like I'll never go back again probably, but like, it's the same shares that I've owned, for a number of years in the company. And so that's happening today.
But Jim, let me ask you, like I get a little bit paranoid about custody risk. How do you think investors will kind of like navigate that conversation? Because like when it's Galaxy in my Schwab account, it's like, I mean, they can't put a gun to my head and take my shares. You know what I mean?
Yeah, no, I mean, so it's a really good question. And, the pros and cons to a whitelist of addresses is exactly that. So like the shares of 𝘗𝘯𝘵 can only go to protocols that we support. So like we've done the integration that Robbie was asking about, but also to like other investors that we know who they are. And so if somebody puts a gun to your head and says, send me your 𝘗𝘯𝘵 tokens, if it's Robbie and I know who Robbie is, then like I'm going to be able to help you get your shares back from Robbie, because like the transaction goes from Andy's wallet to Robbie's wallet, and it's very clear who's the one that robbed you. But if they try to send it to a wallet that I don't know who they are, I prevent that transaction from happening. And so there's a compliance perimeter that makes this like a Fidelity type experience, but just gives you the integration to DeFi to let you do cooler things with it. But it is protected in that sense.
So is that concept part of this opening bell platform?
Yeah,
that's exactly. Like one part of it.
Yeah, one part of it is like working with issuers to be able to bring canonical native issuance on chain.
Yeah.
You know, we work with them as like as a partner, and then it's the distribution side, which is partly DeFi, but also part compliance as well.
Mm. And so when you're recording this like legal equity ownership on chain, are you using like signature based like programs, or like how am I with an undoxed, non KYC on chain wallet, if that's the case? How are we gonna, like, what does the mechanics look like to actually make that happen?
Yeah, good question. So like literally go to superstate.com/register. Andy can fill his application out in 5 minutes and then
Yeah.
be on the whitelist. And so now you go off at a DeFi and trade everything that we administer. We also, in the next couple of months, are going to be announcing some big wallet partnerships. So like within like your favorite wallet, they're going to say, do you want a KYC to trade stocks? You say yes. And then you could literally do it. Because I think what's happening is, like, going back to what Robbie said, like, wallets are becoming the neobanks of the future. And so, you don't have to log into your favorite fintech to get stocks, and then your like, other bank account to see your like, your checking account, and then your crypto wallet to see your, meme coins and stable coins. Like, these are all going to be housed under one roof. And so, yeah, I mean, you either onboard a Superstate directly or through these like channel partnerships, you're going to be able to just like trade them through like wherever you're trading right now.
Yeah.
As that traditional world that has already kind of got the relationship with the end consumer, those end consumers, they don't want to change their behavior. They're just going to kind of go again to the brands that they continue to trust. But those companies will have this infrastructure integrated. From the conversations you're having with some of these institutions, are they looking to build out these things themselves, or are they going into the crypto world and they're kind of picking and choosing the best in each of these categories and either acquiring them or partnering with them to bring the infrastructure in-house?
A little bit of both. It kind of depends on the DNA of one of the institutions, so as some banks feel like they can build everything themselves in-house, and like they might get that done in 5-10 years, and we're going to be all way ahead of them by the time they get there. I think there's more savvy firms that, whether they're brokerages, like, I mean, obviously just look at Robinhood. Like, that is the epitome of a high, fast-paced, very innovative organization that built a lot of cool stuff themselves, but also partner with the ecosystem. Like, they didn't build their own chain from scratch, like, right? They're leaning on Arbitrum to be able to do that. So, I think you're going to see the ones that are going to win are going to partner with the innovators that have already built a lot of this infrastructure. Because, there's no reason to reinvent the wheel and build your own wallet if, Phantom or MetaMask already has a massive distribution. Like, plug into those networks, you'll be more successful that way, is my opinion.
Yeah.
Yeah.
I've got the Galaxy chart pulled up here, and I'm just kind of curious on a whole different kind of train of thought. Are people like really bullish on Galaxy right now? Like, is this like the stock? Because it was like Coinbase stock last cycle. You know what I mean? It was like, that was the thing. The IPO marked the top, and it was like, it feels like Galaxy's kind of getting that treatment.
They are. I mean, they spent a lot of time building an amazing franchise, and they've been rewarded for that across not just crypto, but also AI. I mean, like, funny anecdote. I was talking to Jefferies a couple of weeks ago, which is one of the largest sell-side banks, and I was talking to their head of digital asset research, and I was like, hey, we've got this partnership with Galaxy to tokenize, like, you should write about it, let all your TradFi buddies know like how cool this is. And he's like, I don't cover Galaxy, our data center analyst does. So like, they actually have a big AI data center business, which, given the infrastructure build out, has clearly been a tailwind for them, and they've done really well with that narrative. So I think there's a convergence between like crypto retail understanding what's going on at Galaxy, the institutional business is on fire, and their AI infrastructure continues to grow. And as of last Friday, it's undisclosed, and maybe in their earnings call they will disclose it. But I mean, I'm curious to know who the large asset manager that took a $450 million stake in Galaxy is, because that was their IR team put that out on Friday, which I think has gotten a lot of people understanding like the real institutional franchise that Galaxy's built.
Yeah. So the bull thesis is it's got a kind of like AI oriented data center appeal to those types of investors, as well as just a business there. I mean, the cost of compute is just skyrocketing. And then they've also got this new neobank thing that they're launching, which honestly should crush. And then just the other kind of general crypto I mean, they own a bunch of crypto. Obviously, they trade. You know, all that all that type of stuff. When you were kind of trying to make this deal happen, was it like from your entrepreneur perspective, from the founder perspective, was it like we want to bet on Galaxy in this way, so like we're going to prioritize them in our queue, or like how do you think about the partnerships that you're trying to make? Because I ought to think that the success of Galaxy also has a lot of impact on the success of your tokenized kind of situation here.
Yeah, I mean, it's a great question. I think we've been very strategic and selective on who we partner with when we roll new products out to market. The DNA and ethos of Galaxy and Mike Novogratz is very similar to Robert Leshner and myself and the founding team and all the employees at Superstate, which is do all the right things, build an institutional business, but also like challenge the status quo. So I think we aligned a lot on that, and they were actually looking for an opportunity like this in the market, and looked at the whole landscape of all the different tokenization providers, and landed with Superstate. And I think given their institutional relationships, the size of the business, it made a lot of sense. We look at forward like 𝘗𝘯𝘓𝗧𝗏 and the DAT that both Galaxy Cantor and Galaxy Jump and the Multicoin guys put together as like a great partner to help build new cool stuff on DeFi in Solana land. And then also the same thing on the SharpLink side for Ethereum. SBET is an amazing partner there with, obviously a very storied history of the founding team. But it's kind of tough from my standpoint. I'm head of business development, so I want to get deals done and do a lot of really cool stuff. But we're also very selective, and we're happy to be patient to like build the groundwork and make sure that like all the pipes are laid, so that then when you turn the water on, that like everything flows nicely. And so you'll see us with these marquee relationships to get started, and then really expand and open up the spigots from there.
Yeah, man.
Yeah. I just keep coming back to this idea that we have now the convergence between these two worlds, and you guys have gone and tokenized some publicly issued stocks. Now they exist on blockchains, both Ethereum and Solana. I'm just curious what this looks like if you do it from the jump. If you do it from origin, it's like I imagine it's like a combo IPO ICO that maybe occurs at the same time. Have you thought about this idea? What do you think is kind of the realm of capital formation as these two worlds converge?
Yeah, like OnlyFans should definitely do both an IPO and an ICO. That would slap.
Insane example. You can tell where Andy's head is at. But in general, yeah, how do you see this playing out?
Yeah, I mean, look at Polymarket partnering with the NYSE, right? There are, and like I mentioned earlier, NASDAQ is talking about tokenized stocks going into the exchange. Like the opportunity for secondary trading is very real, and it's very exciting because of all of the stuff you can do with assets on chain that you can't do in TradFi. Capital formation, I think, is the next frontier for all of this, because there are very great examples of venture-like returns in crypto for assets that have a lot of attention but might not have fundamental value or public disclosures about how they operate. And so I think the convergence of a lot of wallets and activity and stablecoin growth. I mean, like $16 billion of stablecoins on Solana, and there's like almost 200 billion on in Ethereum. Like that capital needs to go somewhere, and the democratization of access that you can have with an internet connection and a wallet is dramatically different than an IPO on Wall Street today, which is very much kept in the hands of a few people. And Robinhood tries their best to give you an allocation, but like they're not always successful in doing that. And like Circle IPO, my friend lost a bunch of money because he didn't get the full fill. So I do think, yes, Robbie, like we have designs with partners that are either doing a kind of dual issuance, hey, let's go public on the NASDAQ and on chain at the same time. But then also there's a lot of companies that are like, we're not going to launch a governance token. We've got an amazing business, and we're going to go IPO through Solana or through Ethereum directly to investors that are on chain that like our business, that we should reward them because they've been users of our product for 10 years. And, if I go through Goldman and New York Stock Exchange, I might not give them access like I could if I do it through a front end on the web on Solana. Like
Fireblocks, BitGo, all of these types, there should, again, it's going to be a process because this is totally new, Jim. But those are the companies that if we get that kind of ICO IPO combination, I think the crypto native people could I think we have enough strength, at least in like the whales and the people in the community now, to like actually impact what that stock would actually trade at on the market if there was a well received, for lack of a better term, like fair launch or like equal opportunity within the on-chain landscape.
Totally. And like, another really cool thing is, when companies go public, part of the reason why they go through banks and underwriters is because they get them in front of like Fidelity and T. Rowe Price and like big institutions, which by the way are on chain, number one. And number two, like they do it because those guys are long-term holders of the stock. Like there's a lot of loyal investors in crypto that would be long-term holders of the stock. And the beauty of a tokenized asset is, guess what? You could also programmably verify or enforce, a holding period on your stock if you wanted to set that mechanism up. Like, as long as all this is disclosed and done the right way, that's our view, is that like capital markets from a capital formation standpoint, Robbie, I'm glad you brought it up, is definitely the next frontier to really build out internet capital markets.
Jim, last thing I got for you, what was the rumblings last like 3-4 days? What came to your desk from the big guys? We had Vance and Michael on yesterday, as I was saying, and I was asking them like, is there a newfound lack of confidence in the top crypto assets? I mean, when you see the top 100 tokens literally go down 80% in a matter of an hour, that is something that if you're looking on from the outside and looking to figure out how to get into this market, might kind of shake your boots a bit. What are you hearing?
Well, so what I'm seeing is two things. Like one is the DeFi continues to just prove how amazing it is, right? Like, Solana transaction throughput was amazing. DeFi across all the different, whether it's Hyperliquid or Drift or Aave, like you have all these amazing use cases where you just continue to demonstrate that like centralized risk management is tough and decentralized risk management works at scale despite massive long tail risk. I mean, that's why like we launched Superstate, because we were at Compound watching everything implode in 21, being like, why isn't Wall Street using Compound? Like it just makes no sense. So I think that's one thing, is like it just continues to like show that DeFi is legit. I think the second thing is, you always want to know where the bodies are buried from a leverage perspective in order for a healthy capital market. And so given the deleveraging in OI that's happened over the last like 24 hours, and yet we're still like I'm not checking the tickers right now, but like, Sol is back over 200, Bitcoin's back, still above, 110, 115. That instills confidence. I think the other thing too is like watching Athena manage risk the way it did. We run a basis fund ourselves too. We're very fortunate in the sense that we do CME futures in our basis fund. We don't trade perps on chain. So like over the weekend, we had a lot of clients reaching out being like, you guys okay? What's going on? And like, CME was closed and we're fine. But watching Athena handle the way they did, like mad respect to Guy and the entire team over there and how they've built the protocol and continue to sustain, all these left tail events and, doing it all the right way and working with all the different counterparties that they have. I think that was like, that's always like the scariest thing, is like when you have a $15 billion asset that has a weekend massive deleveraging, like what the heck is going to be the domino effects? And, here we are back at, similar highs that we've been at since, Thursday.
It's kind of like all-time highs, Jim.
What's that?
And he said, we'll see you at all-time highs.
Yeah. Well, Superstate hosts an event every year, and last year we hit 100K when we did the event, and our next event is in 2 weeks. So
there we go.
Let's see what happens. November 6th, I think it is. So
where's the event?
We're gonna be doing it in New York. So I'll send you guys an invite.
Oh, we'll see you there, buddy. We'll be there for SmartCon, doing live streams and stuff and podcasts and such. Great. So we'll come through and celebrate the oracle of our industry at all-time highs.
See if we can run it back.
All right, Jim. Thanks for your time, man. Great work.
All right, thanks, guys.
We'll see you next time.
All right, dude.
Thanks, guys.
Peace out. Yeah, man. I mean, Galaxy is going to certainly have a run. I mean, it's at $40 right now. I was looking at the chart, and it's at $40. It's broken out from its last highs. So, yeah, I mean, that is going to be, I think I'm tempted to rotate some of my coin into Galaxy. I've been a long time
Coinbase
Coinbase holder.
Galaxy stock.
I've been a long time Coinbase holder. It looks great still here. I mean, it's at 348. I'm up like 6x on it in like 2.5 years. But man, Galaxy just looks ready to go. All right, guys, we got Tulip King ready to come on. There we go. We're going to get him up and get firing. Yeah, we got to figure out what the hell he thinks about what's going on. Actually, I'm going to ask him about what he thinks about that rotation. I think he's been bull posting Galaxy as well.
The Coinbase to Galaxy rotation is
I'm thinking about it. I haven't made a single stock portfolio move in like 1.5 years. And it's been working, but right. And I think it'll still work, but it's a question of like which is going to go higher. So yeah, let's get him up. Tulip King, what's going on, man?
Hello, how you boys doing?
Dude, good, man. Welcome to the show.
We are assessing whether or not I should rotate some of my Coinbase stock into Galaxy stock.
Dude, my honest answer would be, why are you holding stocks? That's my high level takeaway there.
But all in.
Yeah, you have to be. Like I don't think there's anything wrong with stocks, but not for me.
Okay.
Tulip, please just explain what is happening on the whiteboard behind you. The world wants to know.
This is an older whiteboard. This is when we were chatting about like Def AI and all the agents and everything. And I think at some point I was trying to explain some architecture decisions to the analysts. So it's old alpha. There's nobody should trade any coins or anything I see on this.
Okay. No tickers on the whiteboard.
Yeah. Man, did you survive the weekend washout?
Yeah. Thank God. So I had I think during China season, I was lucky that I got hot a little early. So I was trading hot through Aster, XPL, all that stuff. Then you inevitably have the moment where you're like, dude, I'm perps God. So all of a sudden I start taking perps trades I shouldn't. I'm just chopping myself up a little bit. And then I had the good sense of, oh, I'm not perps God. So let me take off the leverage, phone home a little bit. So not out of necessarily like the strongest intuition, but just out of like I'm getting chopped over here. I stepped off all the leverage. I was holding the two best assets you can, Bitcoin and ZEC. So yeah, I kind of survived the liquidation, was just chilling.
Zcash is just, Mert has gone from like Solana, the face of Solana, to like the biggest Zcash cheerleader in the world in like a span of 2 weeks. And that thing has gone 10x. When did you enter?
I bought around like the 230s level, nice. kind of somewhere around then. So
where are we at now? We're probably around like 3. Are we at like 300?
Oh, are we?
I
think you guys, I think it might be the next Bitcoin.
So, I mean, that chart is insane, dude.
It's ridiculous, yeah.
So I think I saw Mert or somebody saying that like he feels, well, I think Ansem was all over it too, saying that like it's probabilistic that like some OG ETH and Bitcoin whales will move some of their capital to Zcash. And like we don't need to get into like all the depths of why, because like it gets really libertarian really quick, and I get it, and like I feel compelled to do it. And to shield my, Zcash and like kind of like play that whole game. And I don't, it's just a compelling freaking thing right now. And it's also just like, it's kind of scary in the sense of like where we are in the world's progression, that like, I don't know, that like Zcash is like a sign of the end game type of vibe.
Yeah. I think that's actually why it's moving, right? Like if you play out the end game thesis, like for Bitcoin, for fiat, right? Like we all kind of know where it goes, right? And like Bitcoin at 10K is not like an indicator that we're in like the end game thesis, right? Bitcoin being one of the 10 largest assets on the planet, crossing 100K, doesn't look like they're going to stop printing money anytime soon. Like all of the sudden, the end game thesis like warrants an allocation, right? So I think what you're seeing with Zcash is essentially Bitcoin. It's easy. Like I'm 100% confident we're winning, right? Like Zcash, I'm N% confident we're winning. And I think you're just starting to see like some intelligent people kind of front run that allocation there. I think that makes it really hard to trade and much easier to just hold. But I think we're closer to the end game than we are to the start of the game.
Yeah, interesting. No, I mean, I feel you though, because it's like, I mean, why do you want to own Zcash? You want to have privacy over your money. You want to be able to bring that money wherever. You don't want the government to be able to seize it. You don't want, you could, you like to do creative accounting when it comes to like taxes, all that kind of stuff. Where do you think this thing goes by the end of the year? Like, what is your Zcash end of the year take? What is your Zcash 2026 take? Like, obviously, it's not going to be resistant to a broader bear market if we do get anything like that. But, it does feel like the community wants to own this thing longer term.
Yeah, I think like I've been studying a lot of like the Bitcoin fractals. Like it's kind of funny when you're talking about a coin to tell people, oh, go look at Bitcoin's 2014 chart, right? That's definitely a little bit of a laugh. But like, yeah, my price target is basically anywhere from $30 to $3,000. And like that's the ridiculousness of the outcome though, right? Like I think if you are thinking this could be the silver to Bitcoin's gold, it's like a money trade, which is obviously like money is the highest product market fit in crypto. And like money is the most valuable asset, right? It is like the provenance. So I do think like you have to expect like just a ridiculous amount of volatility. And when I say like, oh, study the 2014 charts, I also mean like study the trading pattern that worked, right? Like the best traders in all of crypto are literally just whoever started DCAing Bitcoin first, right? Like end of the day, like Samani's made a hell of a trade. Somebody's made a hell of a trade. Ansom's one of the greats, right? But like they all got beat by that guy who just bought Bitcoin and lost it under his couch. So like that's kind of my Zcash strategy, is to just buy it. And like I've been debating like muting the word Zcash on Twitter and muting Zec and be like, I don't even want to see any new theses, any new ideas. I've packed my moon bag and I'm just going to walk the fuck away from this thing. So like, it's tough.
When Zcash first launched on Poloniex back in 2015, it was more valuable than Bitcoin. People were pricing it at like 3 to 7 Bitcoin in some of those early trades.
Yeah, like if you look at the wick on the old charts.
When it first launched, it had such a hyped launch because of some of the theses that you're describing, is that it's basically got all the same principles that make Bitcoin great. It doesn't have the immaculate conception of Satoshi Nakamoto and whatnot, but it has that plus these privacy features. I think, one interesting development as of late is you've got this destruction of Monero, which was always kind of the other privacy coin was Monero. But they've gone and they've essentially ended the project. There's been back ends and backdoors and things. And so
it's over. They've completely ended it.
Fluffy Pony has moved on to a new project. He's the Riccardo Spagni guy that was leading it for a long time. There was debate about and controversy whether the IRS had a backdoor to try to catch some of the criminal behavior that was going on. The tech kind of fell through. They did some ambitious ring CT signatures. Doesn't matter. The point is that Monero is really falling flat. And I would anticipate that a lot of people that had a lot of the privacy, attraction to Monero, that market cap is going to start to transition over to Zcash as people realize that Zcash is the one that's going to continue.
And the other thing is that this near intense thing is like actually allowing Zcash to now be interoperable with the rest of the space. I mean, Tulip, I'm sure you've seen this. They're basically living on an island for the last 7 years. And then now it's like they just got like their first highway. So it's a whole nother open door, right?
Well, that's the beauty of the trade. And something I had kind of tweeted out when I originally started like scaling into it was, I think at first it was easy to look at the spike and like scoff and be like, okay, another Zcash spike, China season, we're at the end of the cycle here. But access matters, right? So like when it's just easier to hold this stuff than it has been historically, like Hyperliquid now exists and can list it more quickly, right? Near intense, like how many people had heard of that before this? But like it's now the asset is like structurally easier to hold. So, the best version of this trade is essentially like kind of a recycling of a lot of old holders into new holders, like at this cost basis. Obviously there will be some volatility, like it could just go crazy low and bounce straight back up. Who really knows? But like if you can recycle some of the holder base here, like get some of those whales out of those positions, but like yeah, I just hold it now, like on my phone. And so let's rip this thing. You know, it's accessible for the first time ever. I think that kind of makes all the old charts like not matter anymore, because it was just a different paradigm.
And what's the world that you come from? And I know Andy, there's got a lot more thesis and Andy's other question there, but I'm just curious to get a little bit more on your background, because it is your first time on the show. Like, what was your first entrance into this world? Kind of where did you get your feet wet and kind of like, you know, cut your teeth, and ultimately, you know, where did that led you to where you are today? Could you just give us a little bit more about, you know, the Tulip King lore?
Yeah. So I was in college, like Wall Street bets, like stock bro, essentially. COVID hit, had too much time on the internet. Like, you know, you watch enough financial content in COVID time, you get to, oh, they're printing all this money, inflation, commodities. Right. Eventually you end up at Bitcoin, right? And then I watched the Andreas Antonopoulos, like one of his OG whiteboard, like Bitcoin videos. And I was like, oh, well, this is just obviously the greatest thing I've seen in my life. So I just full ported, which I was working at like a flower shop at the time. So the full port was small, right? But like, I just, it's part of the lore. Yeah. So I just full ported Bitcoin, like went as deep into crypto DeFi during DeFi summer, like as humanly possible. So, I mean, everything from like writing scripts to like yield farm positions on Polygon when they were doing liquidity mining and incentives, to like doing, you know, ape swap on Phantom and all of Andre's projects, to 𝘂𝘂𝘶, the Ohm forks. I was just click every single button like you could possibly imagine. I joined Messari about 4 years ago, so pretty much right after graduation. I had a couple of jobs and was doing some fun stuff before that, but joined Messari on our data engineering team. So I'm not one of the Messari analysts or anything like that. I actually like lead our on-chain data team. So when you see charts and metrics like on different reports, you know, we typically play a hand in that. And then I also help with a lot of like our AI and some of like the data processes that go into our AI products and pipelines and stuff. But yeah, I just like wake up and think about crypto all the way till the point of going to sleep is pretty much every single day for the last many years for me.
Yeah, welcome to the club, man. Glad to have you here. You put out a tweet that really grinded my gears as a plasma bull, EtherFi, as a plasma seed and EtherFi seed investor, which is that you think that Phantom is going to be the biggest neobank, essentially. And I just want to give you a chance to explain your thesis before I decimate it.
Yeah. Well, I think, to be honest, I think it's like the most left curve, right curve thing you could say is like, just use your wallet, right? Like everybody like describes all of the functions of a neobank, like, oh, spend. I'm like, you mean like just send back and forth, or like scan a QR code? And they're like, oh, save. And I'm like, you mean deposit into 𝘂𝘂𝘶𝘗𝘗𝑚, right? So like, I think the left curve, right curve neobank thesis is, dude, just use your wallet. And then I think like to get a little deeper into that, like it pays so much to be upstream of the users and to be the front end into crypto. So like Google Flights, right? Like how does Google kill Trivago and hotels.com and all of that stuff? It's easy. They route hundreds of millions of queries to them, and they just see like, oh, okay, people like to do this. This is how they search for it. This is what they look for. Now, when you search for the #1 product, right? Like I kind of think it's that easy for like Phantom or MetaMask or Trust Wallet or whoever to be like, hey, we like all these assets are already in our software packages, right? Like I know every search that users are making. I know every transaction that they're signing. Like I know their preference for risk. I know their preference for yield. I know the average user is 3 hops away from another user or 2 hops away, or we launch a username feature and this percentage of our client base actually engages with it. Like I think if you have an intelligent team with like that level of just upstream control, it's going to be incredibly hard for like a new protocol or a new chain to say, hey, use this other thing with competing products to access our product, please. You know? So I think that I think they're just in such a strong position on the simplest and most like upstream perspective.
Well, you know what's funny, right? So when I was speaking with both Mike from EtherFi, the CEO, and Paul Plasma, right? Mike and Avichal from Electric Capital have this idea with these neobanks that, you know, you look at Cash App and Venmo and Revoluts, and they have such a broad scope of customer base, like to the extent of like, hundreds of millions of people from, anywhere from like, lower middle class, low class, all the way to like the rich, right? And it's really like a scale. Dude, their thesis is that they don't even need nearly as many customers as a traditional neobank, because the average crypto folk, as they scale over the next 5 to 10 years, if Bitcoin, does what we think it's going to do, if crypto does what we think it's going to do, that like the skew of billionaires and 100 millionaires in the world is going to be skewed towards crypto, and also just like, deca millionaires and just multimillionaires, etc., all the way up to like if you just have a couple 100K, and that those people are going to spend so much more on a month or like an annual basis than any just kind of like average folk. And so like for these crypto neobanks, it's actually an interesting proposition where like, you could have 1/100th of the total customer base, but do more volume than any of the actual like of these larger kind of firms. And I'm just curious, like, do you think that there's like a logical reason in this? Like, do you believe that crypto neobanks could be as big as some of these larger kind of traditional ones with a much smaller customer base, just because of like the status quo of like the wealth that is in crypto? Or kind of how do you think about like who's going to be using these neobanks if it's not like, because I mean, let's be real, people aren't going to use Phantom who have just, who are used to like Revolut, or they're not going to use the 𝘰𝘪𝘴 app, they're not going to use Plasma. Talk to us about like how you see the customer acquisition, the customer base kind of concept play into your thesis.
Mm-hmm. Yeah, so there's a lot of interesting places you can take that. And I'll just throw a lot at the wall and see what sticks here. I completely agree with the sentiment that like the crypto user is just zeros more valuable than like the average user, right? Because growing wealth effect, like the trenches have a habit of taking money from the not so wise and converting it to the pockets of the wise, right? And especially like a very high propensity to transact, right? Maybe not your Bitcoin maxis who are just parked and chilling, but like, I'm flowing money like crazy, right? Like a bank would have an aneurysm looking at my transaction history.
100%.
So like, I completely agree. Like a very small amount of crypto users who enjoy to use your product are worth multiples of like a traditional ramp or a bank user. That thesis is in my estimation correct. The question to the point of like an 𝘰𝘪𝘴 versus a Plasma versus a Phantom is like, in that stack, what are they going to use? My opinion is kind of like, okay, somebody who's managed to like run up the digits on crypto, right, is a power user, like inherently so, right? So like, is a power user likely to, use their wallet at full capability, or, move things over to Plasma or 𝘰𝘪𝘴, right? Like the thing about them is they're going to be so flaky, right? Like they know how to move their money. They know how to find the best yield, right? So it's going to be very tricky for like an 𝘰𝘪𝘴 or a Plasma to like lock down that very agentic power user, right? Versus the wallet, which doesn't have the concern of locking them down because they're doing everything like through the lens and through the access portal of the wallet. So I do think as far as like that user is valuable, who retains that user, my bias is still towards the wallet, right? But then the super interesting question is like, okay, wait a second. We haven't had like banked individuals to like the tunes of the millions, the tens of millions, the hundreds of millions, right? Like if you think of Bill Gates, like just making up that, say he has $100 billion, he can't go spend $100 billion, right? Like he has to set up some fake foundation to bribe governments to allow him to, distribute money, and they're taxing that all along the way. Anytime he buys a company, there's 17 people who can like say no to that. But all of a sudden, these neobanking services are offering money to somebody who has $1 billion and can just spend it. Like if they sign it, that $1 billion goes where it wants, right? Versus like the Bill Gates signing $1 billion, you're not going to get it for half a year. So I do think the other interesting question is like, what services do they want, right? Like you've actually never seen somebody who can just spend $1 billion. But if somebody can spend $1 billion for the first time, shit, what can I sell them for $1 billion? So I'm also very interested, like the neobank side is interesting, but what I find more interesting is what comes after that. what are the things we're going to be selling to these people? Like, I think that will be incredibly interesting as well.
Seeing this because they're trying to protect us. That's like the regulations and the banking laws, and why they're trying to slow down the capital velocity that you're describing. Is that once you have the freedom of access to all of these assets and these applications, how are we going to be spinning and spending so that now all of a sudden the velocity of which we're moving the capital is at a much, much more increased pace? So I think you're absolutely right. I think we are already starting to see this play out, and we're just going to see this play out at a greater scale. And what you're describing is effectively this fat wallet thesis for a long time. And I know you've seen this. It was fat application thesis and it was fat protocol thesis. Is the value accrual flowing up to the applications, or is it going to be flowing down to the protocols in terms of gas fees and these sorts of things? We've seen blockchains become commoditized, gas fees drive to zero, fat protocol thesis is cooked. Applications are losing everything to MEV. There's infrastructure things that are taking all of this and they're using it for their own value accrual. And what we're seeing is that the end user, the relationship that owns the distribution layer, is the one that can ultimately have the first intermediate effect of charging fees. And then we're going to start to see those fees get driven down, and we're going to see the next level. I like to think of this as fat user thesis. The user is the one that ends up getting the value accrual back to their own wallets. They're going to be able to take charge. They're going to be able to control their own portfolios and ultimately democratize access for everyone involved. So I think this is a really optimistic view of the future, because ultimately we're going to have a lot more access and a lot more control over our own finances. This doing, not able to do things because it's, we're being protected by someone else who thinks they have a better understanding of our own self-interest. Fuck that. Like, they don't know what we want. They don't know what we're trying to do. And so I'm really, really excited for this future and the freedom that this enables. So end rant, I guess, but I don't know how that really comes about. It's really, it's regulatory, it's engineering, it's technical, it's all of these things, but it's also something that I wanted to ask you about, which is this transfer of wealth. I saw a chart the other day, and it was like, when I learned about finance, and it had color-coded baby boomers who learned about it like once they kind of started working. And then you progressively saw people learning about finance earlier and earlier, all the way to Gen Z Zoomers that learned about it in early adolescence, when their hormones are firing and they're like literally create like dopamine and all of these hormones are like firing in their brain. That's when they're learning about this like inherent thing that make like these neurons fire in our brain. That's when they're learning about finance. And they're fundamentally they're having a different relationship with these numbers on the screen, video game era, internet capital markets, internet money. How do you think finance evolves? Like, how do you think our relationship and understanding of money evolves as we basically enter the internet era of finance, and we have this transfer of wealth where trillions of dollars are changing hands from boomers who, they were trying to follow the American dream. They just wanted to buy a house, have a couple kids, right? Work a good job, retire. Now we're transferring into like this social media era of finance. Like, what? Like, how do we make sense of this?
That's a loaded question.
Super loaded question. I'm just kind of thinking out loud here, but like these are some of the things that I think if we can get ahead of it, then we can start to build applications and businesses that harness this and make the most of it.
Yeah.
So what do you think the end consumers are going to be looking for out of this new era of financial apps?
Yeah, this is probably where I enter just political extremism and things get a lot more fun. So one, I'm stealing fat user thesis. I love that framing. I've kind of had the long-term perspective that a lot of the crypto primitives just trade at zero, right? Like Uniswap, Hyperliquid, Aave, all of them, right? Like I don't see where the long-term moat comes from, right? So I think like so many projects in crypto probably have to zero and just trade at like, what is the bare minimum, like these amount of fees, pay the LPs to keep liquidity here, or they pay the 2 engineers to manage Aave's risk engine, right? Like lights on only type of operations, right? So I think the financial services sector just goes to zero, but that opens the gate of like, okay, now financial services are free. That means they're now available to everybody. So everybody has more money in their pocket. Well, what is digital money is Bitcoin and potentially Zcash. So those, like whatever your price targets are, just raise them. Just do yourself a favor. Don't even set price targets for those types of things, right? Which then means like, okay, now we're living in a weird world where services and information services types of businesses don't really have like a moat anymore, right? Like even a Netflix or like a Twitter, like that's going to end up being some democratized social graph, right? So when all the information services, because that's all finance is dollars represent signal in the system. A dollar is just information. Like I did this one thing, this guy gave it to me, I owe it to him, the bank owes it to him, the Fed owes it to the treasury, whatever, right? So when all of that zeros, you just actually have like physical resource left. Well, the other problem is like it's also laissez-faire, right? And like we know, like in competitive economic landscapes, that winners just win big and win bigly, right? You've already seen the
compounding
on all this crypto stuff, right? Like Arthur Hayes is just better at crypto than a fuck ton of people, right? Justin Sun, love him or hate him, is damn good at the crypto game, right? He's better than everybody on this call, right? He's a like foreign embassy now, or he's His Royal Highness, right? So like, I kind of think at the same time that Bitcoin kind of disintermediates the function of money from state, at the same time as crypto and smart contracts disintermediates moat from all information technologies. I think what you're kind of left with, and I have an article on my account somewhere called Neo-Feudalism, is I think you're actually left with kind of a feudal society where you've restructured the relationship between like people in the state because you've separated the state from money. You've restructured like what has typically been the profitable information businesses, like the Googles, the Microsofts, all of that stuff, to the point where nobody can compete in that space. And it's just about like physical resources. So I think you kind of, this is like very not like in taste to say, but I think you kind of end up with like a feudal society where like you kind of need some amount of Bitcoin to get into the Citadel. Maybe it's ZEC, right? But all of a sudden you see like people as nation states, right? Where like you already see this in like some of the crypto hedge funds where it's just one guy and he hires like an engineer to do like some prop trading from him, and he hires a personal research assistant, and then he has his legal entity in BVI, and he can pay anybody whatever amount he wants all over, and he just marshals this small little SWAT team of essentially like internet capital markets operators, right? I think you see these small islands of like SWAT teams, and that is a feudal structure, right? Like he has resources, he's now leasing those out to people with relevant skill sets and talents that can grow his resource base. Hopefully they're involved in the upside there. So I think everything looks very, 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 very different a couple of decades from now.
Populism works the best possible case, is you actually do give the means of production back to the people, and then they can go and they can lease out land, labor, capital to their own self-interest. Tulip King, the globalists lost. And we're entering the hyper-local era of finance, politics, philosophy. Thank you so much for sharing your knowledge with us. Dude. It's been an absolute pleasure. And please come back soon, because these things are changing fast.
Yeah, thank you so much for having me on. Good luck in the trenches, everybody.
Yeah, dude. Appreciate it, man.
See you next time. Thank you, brother.
Alrighty, guys. Sweet. Well, first 2 segments were pretty fire. Both were good. We're gonna have our Stabled Up show, episode 5, come on next. So we'll take a quick break and we'll be back with that. Alrighty, guys, welcome to Stabled Up, episode number 5, powered by our friends at Frax with their upcoming FraxNet release, one of the OGs and premier stablecoins and stablecoin infrastructure players in the space. Today, we have Anthony Apollo from the Wyoming Stable Token Commission. Let's get Anthony up. We're going to be talking about Wyoming's new initiative to launch stablecoins, as well as the latest happenings in the stablecoin space. Anthony, welcome to the show.
Thanks for having me, guys. Appreciate it.
It's good to see you.
Absolutely. Thanks for coming on.
We're glad that you're pushing the agenda forward. Today's a big day for Stripe. Stripe has just announced stablecoin payments for subscriptions. I think this is a great place to start because stablecoins and crypto has been very, very difficult to actually create subscriptions with, because there's no like recurring payment flow. It's obviously difficult to do payment reversals. So this is a big moment for, I think, Stripe, because anyone who's ran a business who's tried to set up recurring payment flows with, blockchain-based stablecoins, it's very, very difficult. So Anthony, I know this is like fresh for you. It just hit the news wire 5 minutes ago, but curious to hear your initial take.
Yeah, and thank you for bringing that up. I have not seen the newswire yet. Like you said, we're running hot here, and all things stablecoin. You said it's a big day. They're all big days at this point.
Yeah.
But with Stripe, I'd be interested to see how that's related to their kind of blockchain endeavors, broadly speaking. But generally, it's a great way to get people to use stablecoins more like they use dollars today. And to your point, we'll get, I'm sure, into my background in a bit. But before I was in this role, I was building out my own blockchain-based platforms, and I saw a couple of early attempts at subscription models. And it's not easy to do, to your point, right? Making sure that there's actually crypto in the wallet to pull and go to wherever it needs to go. But I think as more and more things move on chain, this is fantastic news.
Yeah,
I mean, today's a big day as well for another reason, which is we've officially hit $300 billion of outstanding stablecoin supply. Which is massive. The majority of that being Tether on Ethereum, also USDC on Ethereum, and then Solana and a couple other platforms, Binance Smart Chain, Plasma even getting up there now. We're well on the road to trillions, guys. I mean, we are getting closer than ever. Anthony, what is your perspective on the path from 300 billion to $1 trillion? What does that look like? And then we'll get into your background. We'll get into what the work that you guys are doing is.
Yeah, I think we're rapidly accelerating. Of that 300 billion, I think 45 billion of that was all issued within the last 30 days. And if we look towards the trajectory that our Treasury Secretary here in the U.S., Scott Bessent, has us on, which is $3.7 trillion in stablecoins by 2030, I think we're well on our way. We're seeing the acceleration. We're seeing institutional adoption. I think the Genius Act, once that's fully promulgated in place by early 2027, that will continue to accelerate things. I think that'll be one of the big boons, as well as what we've seen is a lot of interest from non-governmental organizations or aid distribution using stablecoins. And those are some pretty big numbers that will come on chain very soon.
Anthony, before we go deeper, I'm curious about your background, because Wyoming is a very innovative state. There's things coming out both with stablecoins, but also with Bitcoin strategic reserves. There's all sorts of adoption and innovation that's coming out of the state of Wyoming. And as a public organization, you guys have to follow a little bit of a set of different rules sometimes than private organizations. So I'm just curious, did you start out as a crypto guy? Did you start out as a politics guy? Generally, where do you come from? What's your story, and how did you end up here?
Well, of all of those things I could have been, the least was a politics guy. I did not expect to be in government, state government, federal government, policy lobbying. That was not my speed. I actually started my career in traditional finance, predominantly working at some of the big banks in the wake of the 2008 financial crisis and the Dodd-Frank Act that passed subsequent to that, helping them get all of their books and records in order once there were higher barriers to hit when it came to compliance. So working in the big banks and seeing how the sausage gets made, and oftentimes how it doesn't with very antiquated systems, being in that position and learning about Bitcoin and Ethereum at the same time around the fall of 2015 was a pretty big juxtaposition, right? It was kind of a night and day difference, and started getting more and more into the crypto space that way until about 2017, when I formally joined Consensus, the Ethereum incubator that I'm sure your audience is familiar with. to work on an early attempt at tokenized intellectual property called Solarius. We worked on a science fiction franchise, and then we had all these mechanics we were designing around payments within that platform for paying for the media that you consume, governance tokens that would indicate which parts of the story became canon or parts of the formal story, and there'd be votes by the community on that. Many different, and of course NFTs were in there to actually represent the content, but there was a lot of moving parts on that. Again, I'll reiterate, this was February of 2018 when we launched that. So at that time, so someone eventually called it terminally early, because at that point, like all there was CryptoKitties, and that gunked up Ethereum pretty bad at the time until there's a whole community initiative to kind of bring their code base, make it a little bit more efficient, right? So worked on that, started the consensus sports vertical within the organization, split off in 2018 to work on some of those endeavors, myself, my own startups, and brought that forward. But kind of the longer tail for me is just working on creators' rights, getting people paid for the content they create, removing some of those intermediaries who are, in opposition to that. So along the lines, I've worked with Spencer Dinwiddie, who is a professional basketball player, then on the Brooklyn Nets, now on the Charlotte Hornets, to do a tokenized debt security, essentially a tokenized bond on Ethereum with stablecoin payouts on a monthly basis to the token holders. So that came out right in the midst of the pandemic. That would have been July of 2020. And that didn't get a whole lot of coverage, but that project ran its life cycle as a 3-year bond and hit maturity July of 2023 and did everything it intended to do without fail. So we built a great program there. And then subsequent to that, I was working on a platform called Enso, which was for digital multimedia distribution. So whether it was a game, comic, movie, song, you could bring that on chain. There was tokens behind it to recognize the creator of that piece of intellectual property, to create licenses as a separate set of tokens so someone can buy it, and then effectuate the payment in real time to any number of creators. So we would just split your attribution up by wallet address, smart contract to codify that, and you'd send payments. So all of that has been my background, much more so than politics. But I will note that work did lead me to Wyoming. Robbie, as you mentioned, Wyoming has been working on the legislative framework around cryptocurrency, blockchain, digital assets for about a decade now. There's been 80 bills put forward, 50 of them have passed, most of them under our current governor, Mark Gordon. And seeing all that work is what caused me to leave New York and join the ranks here in Wyoming back in 2021. Again, just as a builder, looking to actually use the fintech sandbox the state had created to play around in for some of these novel programs. But that is what brought me here. And then I came a fly on the wall for the meetings of the legislature, the select committee on blockchain, the stable token commission before I was hired. And when they needed someone with an odd combination of product development experience, blockchain experience, securities law, banking, lived in Cheyenne and could start a program, could start a new role the next day, I was ready and willing.
Man, it sounds like Wyoming is the new Delaware. I'll tell you what.
Well, Andy, I got to tell you, if you take a look at it, Wyoming was the first state to have the LLC, and Wyoming ran a better marketing campaign. So I'm here to make sure that we get the first stable coin out the door and then protect it.
You mean Delaware ran a better marketing campaign?
Oh yeah, that's why they're notorious for it. But Wyoming was the first state to have the LLC.
Yeah, yeah. I mean, it feels like that is like well, it feels like this kind of push towards the adoption around FRNT and just general stablecoin is a step in the right direction. I mean, if you look across the board, a lot of the TradFi players are trying to understand how to best use just general DeFi technologies. But when it comes from like a state level, it's quite different. So let's talk about some of the background here with regards to FRNT. What was your core motivation to launching this state-issued stablecoin, the first stable token issued by a U.S. state? Why did you guys decide that this was the right move?
I think there's typically 3 reasons we point to about why the state got involved with the stable token specifically. And to be clear, some of this predates my work on it, right? The Stable Token Commission existed before I was brought on as the executive director back in 2023. But as I mentioned, the state has a whole framework for digital assets. And one of the key things a stable token can do is create cohesion between different and potentially disparate initiatives. So for example, you have the ability in the state of Wyoming to pay your taxes with crypto. Now you may not want to do that with Bitcoin, but certainly makes sense to do with the stable token, especially if that means you get the process done faster, or if you're getting a refund, you get a refund faster. That's one. We have the digital asset registry in the Secretary of State's office, so you can prove that you are the owner of something on chain. We have many different business entity structures, the DAO LLC, coming back to the LLC again, right? But we have a DAO LLC statute on the books. We now have, as of 2 years ago, the Decentralized Unincorporated Nonprofit Association, or DUNA, which is a bit less of a mouthful, but that is a model that Uniswap has voted to adopt, that Syndicate is now involved with. So you have all these different disparate initiatives. You want to move value between them. It makes sense to do it in a way that is digitally native and also in a way that is stable. And a stable token is a great way to accommodate that. Second one, and this is probably a little bit bigger, is the revenue diversification for the state. So the state of Wyoming is an oil and gas state. So we're always looking to figure out new ways to bring new dollars into the state, because oil and gas is a finite resource, probably not in my lifetime or my grandchildren's lifetime, but at some point that is a finite resource that will run out. The state will need some way to generate revenues. So with the Frontier stable token, which again is fiat backed and fully reserved, to be clear, not a CBDC, will look a lot more like USDC or PYUSD. Then when we get the dollars in to purchase those tokens, those dollars get invested into your typically conservative blend of short duration US treasuries and repurchase agreements. So those are interest generating, currently around 4%. So when those dollars come back to the state, that is net new revenue for the state. And on a quarterly basis, those dollars get swept into the state's school foundation fund. So it's a way to diversify revenue and to pay for schools in the state without having to increase taxpayer burden. And hopefully if the program gets sizable enough, it could pay for not only the schools, but more than that over time. And the last one that I'll mention is that it's the state's second attempt at a fully reserved financial instrument. So if you've looked at what Wyoming has done in the past, one of the models we created is the Special Purpose Depository Institution, or SPDI, or SPDI. So if you're familiar with Custodia or Caitlin Long, she had that institution here. That was something that the state put a lot of time and effort into. There's a 770-page examination manual for the SPDIs. When those models were brought forward, there was a lot of pressure from the prior administration that kind of kept them down. Caitlin has a long and storied fight with the Federal Reserve, for example. And I'll not say too much more about that because there's a lot of back and forth on that in DC. But the goal was to create a financial institution that could custody digital assets, provided everything was fully reserved and then a little bit more, so over collateralized. And the stable token emerged as a second way to get a model like that out so that the users of it, whether it's Wyoming citizens or well beyond, know where their dollars are at any given time. This is not a bank where you put the dollars in and 90% of it is lent out. You can be the custodian of your own dollars.
Incredible. Anthony, that was a great explanation on quite a few points. So I think you actually evoked like 2 or 3 questions that I have in mind, but we'll go one at a time. First off, you're right, Caitlin Long, University of Wyoming graduate, has been a Bitcoin advocate since 2012, has really evangelized the industry. And generally, Wyoming has evangelized the industry. I'm curious where you guys are at now, coming from some of the things that she embarked on while she was doing some work there. You've now issued these token management rules as part of the FRNT token. This kicks off a 45-day notice, essentially a comment period, where people can come in and they can comment on the design, the structure, the mechanism of the FRNT token. Could you describe where FRNT is now in this comment period? What has been the feedback that you guys have gotten? And then after this comment period ends on November 6th, what are the next steps for this stablecoin?
Right. So a couple things. First, the 10,000 foot level. It's important to note that everything that this commission does is done in public. This is probably a good time to throw out what I say is my opinion. I do not represent the commission. The commission there's 7 commissioners, includes the governor, state auditor, state treasurer, and the determinations of the commission are theirs. I am but their humble emissary as the executive director, right? But everything we do is public. The determinations are made in a public forum at public meetings by majority vote. Every one of our meetings has a period for public comment. The rules that we put forth that will govern how the agency operates do have these public comment periods of 45 days to get that public input. Right now, in regards to the rulemaking process, we do have our reserves management rules are live. Those went through back at the end of July. And with the token management rules, like you said, those are up for public comment until November 6th. We do have emergency rules in place that will kind of bring us, if we need to get out the gate first and have those in place, we can rely on those. That's gone through the commission, again, public forum to a certain extent, and that you can provide public comment on it. But in terms of the broader kind of public comment period, the public notice and comment period, again, we have a couple of weeks on that. There's no hurdles there in getting us out the door before that gets done because we already have the emergency rules in place. But we will always want to hear out what the public has to think about where we are, what we've drafted, how it conforms with industry, how it conforms with other statute in the state. We do present all commentary when that November 6th period hits, and we have that deadline. We will meet in a public forum to discuss it and address it. If we need to make changes, there's a difference between non-substantive and substantive changes. Non-substantive, you can make a couple edits and bring things forward, which is what we did with the reserves management rules. You know, someone found a typo, right? You could just strike that and go, keep going. If there's substantive feedback, you know, there's always a potential we have to return back to the drawing board, but that just means at the end of the day, we have a stronger deliverable when we get done with the process. In terms of where we are with the token right now, so we did announce the technical launch on August 19th at the Wyoming Blockchain Symposium. We've launched Front across 7 different interoperable blockchains through our partnership with both Layer 0 and Fireblocks. So that is functional, stress tested. Those tokens were put out, all of our functions were tested on the respective mainnets, and then we clawed those tokens back. We since then have now formalized a relationship with custodians that allow us to actually get the dollars behind the tokens. That is now functionally live. And we are testing that as well to make sure that we have an understanding of the timeline for getting dollars into the account so that we can actually mint the tokens, getting dollars out of the account for redemptions to a user or back to our agency as that recognized revenue. So there's still a little bit more testing going on. And then we're also, of course, wiring up the exchanges and some relationships behind the scenes. These actually be made publicly available. You've likely seen that we've talked about working with Kraken as an exchange that would have the tokens on Solana. We have the Rain card, essentially a smart card that allows you to spend stable tokens anywhere. You'd be able to tap your Visa card, provided you're fully loaded. That gets us into 150 million terminals worldwide. That gets us on Apple Pay and Google Pay out the door. So those are all relationships that are, again, will be live in the very near future.
Is the idea that Wyoming citizens will be incentivized to use this as a form of payment because this reinvests into their schooling and educational systems, and it's almost a form of cash back essentially, but it's more directed right back to something that, you know, they're ultimately benefiting from?
Yeah, so incentives is a good question, right? Because we're a taxpayer funded agency, and one of the things that I'll note here is that when dollars start coming back, we actually first owe those dollars back to the state's general fund. So we are at a minimum like a break-even net zero agency, right? So that's part of it. But if we were to have incentive models where, you know, we're giving discounts on the token, well, that breaks statute. If we're putting dollars forward to get the token into circulation locally, there's certainly discussion to be had about what that really represents, which is to say that could be using taxpayer money to go give other people a benefit. So typically we can't really go down that route. The hope on our side is we can work closely with some of the foundations for the respective chains that we're launching on to get these programs off the ground from an incentive perspective. Those would be more at the chain level than the local level. But I do want to be specific. The Wyoming stable token is not limited to the state of Wyoming. It's meant to be domestic. It's meant to be international. It's meant to be used on DeFi. And that's one of the reasons why we did call kind of the first version of a Wyoming stable token, the Frontier stable token, to make sure people understood that it's wherever you're going, it's going to be there. The term Wyoming stable token we still use somewhat interchangeably, but my perspective, again, personal opinion at this point, is that the term Wyoming stable token will likely be used to define a different token that we may issue, let's say on behalf of a different state, that uses our statute, our rules, our policies and procedures, our tech stack. You know, we've spent years building all of this. There's other states that have interest now, other municipalities, other nations. Does it make sense for them to go and spend years and dollars of taxpayer money building it all themselves, or to work with us to get it out the door?
Yeah. You know, when it comes to the core purpose from the stablecoin perspective from the federal government, I think there's a lot of kind of chatter around this being a extension of the U.S. dollar's hegemony, worldwide, right? The ability to get USD into Turkey, Syria, Argentina, uh, at large across these different jurisdictions. This provides like a way for us to kind of give people access to a store of value that they wouldn't previously have had, within the U.S. dollar. When it comes to like aligning FRNT with like the broader goals of the U.S. government and Tether or USDC, like how do you see the competitive or the collaborative dynamic between the U.S. federal government's objectives and Wyoming's state level objectives when it comes to stablecoins?
Well, I think it's much more collaborative than it is competitive. So just to circle off on the Circle and Tether part first, the goal here is not for us to compete with private industry, right? Tether and Circle have massive distribution networks, massive market effects already as is. If they continue to work with private businesses, that's great. I'm a user of USDC, so certainly familiar with the product, and it's a great product that's been developed. We've gotten a lot of interest more from public sector on our side because we are a public good. Again, we talked about the dollars going back to the state. When we talk about that with different organizations, there's a lot more connective tissue between us and other public entities or NGOs that want to do aid distribution with a program that is, again, a public good, rather than, let's say, a Tether, which, there's obviously some questions about the audit there. And with Circle, which is now a public company, right? They went through the IPO process, which means definitionally they're ultimately responsible to their shareholders, not the end users of the token, or others who are kind of in that mix. So we've got a very different remit, and I think that's espoused a lot of interest in what we've built, again, with the focus from the public sector. So I think if this pie really grows $3.7 trillion, there's going to be a lot of new entrants. We're not trying to take 10% of Tether's business. We're not trying to take 5% of Circle's business. We want to have, a large stake in what the public is doing with their stable coins that can hopefully, create much more effectiveness, efficiencies, and low fees within the confines of state government.
Yeah.
Going back to the question about the broader U.S. dollar hegemony, I am personally a believer in that position that stable coins are good for the U.S. dollar. We've certainly had a couple of conversations with federal agencies, again, super high level, just trying to figure out what we're doing, who've identified very much the same thing. One of the benefits of doing this issuance as the state of Wyoming is that we are doing it as a sovereign entity. So we're not doing this as a Wyoming bank, a Wyoming trust, or a state-owned bank or a state-owned trust. Those are all different models. It's Wyoming state doing the issuance itself, which means that other jurisdictions, whether it's the EU and MiCA or the JFSA, they can't necessarily tell us what to do. Now, they can certainly govern the exchanges that tokens are listed on, and we would need perhaps to conform to that or work with issuers there. But we're certainly trying to play nice. But generally speaking, we've got a lot of leeway here in that capacity. We would answer to the federal government. Obviously, the Genius Act has passed. It is not our perspective that we are subservient to the Genius Act. If you look at how the Genius Act defines their issuers of stablecoins or payment stablecoins, the permitted payment stablecoin issuers, PPSI, that's defined under the term of a person. So a person is a bank, a trust, a fintech. It's any other business entity. It's not states. States are carved out there. So again, we're not necessarily under the Genius Act either, which comes back to the original question from Robbie about our rules. That's why it's so important that we create a legislative framework here that has been built out over years, that has been built out with public comment, because to a certain perspective, we are a very specialized carve out. And that really creates a lot of efficiency for us to go across border, embrace the global remittance use case, embrace aid distribution use cases, and many things beyond that.
I'm curious why, from your perspective, why it's so important to have lots of different stable coins out there. And if one state issues, like Wyoming, will we see multiple states issue? Are we going to have 50 different stable coins for 50 different states, in addition to the dozens, if not hundreds, of stable coins from privately issued companies? Why is it important to have lots of different stable coins from your perspective?
Well, I think we talk about lots of different stable coins. We are at an interesting inflection point where a lot of organizations were announcing their stable coins ahead of the Genius Act passing, and the Genius Act passed, and there's certain prohibitions in there, like there's a prohibition in non-financial companies issuing stablecoins, right? And that comes in the back of Walmart and Amazon saying, we're working on this too. Now, Walmart and Amazon they've got plenty of money to figure out how they can create a financial company that'll eventually get something out there. They'll call it loyalty points and structure it a little bit differently. I'm sure that they'll figure it out in time. But before there was this explosion of actual issuance, when the people were talking about doing it, now there may be some curtailment that may also include the threshold, which I believe was originally $10 billion, maybe $50 billion in the final version of the Genius Act, where if you're under that threshold, you can be under a state charter, regulated at the state level. You go past that charter and asset under management, then you have to be under the OCC at the national level. So there's different carve-outs that can make this more appetizing or less appetizing for different parties. So while I do think we will see many new entrants, I don't think it's going to be hundreds or thousands. I'd also note that once the treasury rates drop, it will be harder to keep these things afloat if you're paying, if you're running a startup with, or even a more robust company with different headcount. If you don't have other ways of perhaps subsisting yourself beyond just getting dollars in from interest income, and you need to pay shareholders out and whatnot, that could be a bit more difficult. So I don't think there'll be thousands of stablecoin issuers, but I think there will be perhaps a few dozen, and they may all serve different roles, right? I talked about how we want to espouse the public sector versus the private sector. There may be some that operate in different geos, and maybe some that bear interest or not. We'll see how it all shakes out, but that's generally the perspective there. And then when it comes to other states, sorry, go ahead.
No, I had a question, but please continue.
Sure. When it comes to other states, I mean, my hope is, again, personally, that they'll come to us and want to work together because we've built out so much infrastructure rather than starting it all up themselves. I will say the Bank of North Dakota, I think end of last week, did announce that they're going to be working on a stablecoin. That's, again, a very specific infrastructure that is, I think, really the only operational state bank. So they're going to be working with Fiserv. Fiserv is working with Circle, and I think PayPal and or Paxos behind the scenes on that. So that's another state getting involved, but I don't think 50 states will all have their own. It's again, Wyoming's been spending years to get this done. Legislation, procurement, actually engaging the vendors, building the platform out, stress testing it, getting the distribution in place. It'd be easier just to collaborate than to compete in some capacity there. So I think we're going to be having some of those conversations in the very near future.
My imagination goes wild when it comes to these kinds of things. I can just imagine, Wyoming, state of Wyoming launches a stable coin, even potentially gets it integrated into some DeFi applications. Now we have like some whether it's federally domiciled or what have you, whether it's private company, public, we have a robust money market of states lending money to one another, borrowing against potential receivables, just really enhancing the capital efficiency of intrastate commerce. This is just really exciting. It's just, there's no question there. It's just an idea.
Well, one more, Robbie, I'll throw at you that's even perhaps a bit bigger than that is, I was at Korea Blockchain Week, spent some time in Japan as well recently. There's a lot of interest there about stablecoins as well. They're seeing how fast this is moving. They're seeing how fast the sector is growing. They want to make sure that they've got their respective legislative frameworks in place and that their respective fiat currencies don't get left behind. And one of the things I've been thinking about is, again, how to collaborate rather than compete. And you mentioned DeFi applications. I think it'd be quite interesting to have liquidity pools that are potentially even state or nation state sponsored, where the Frontier stable token can provide the US dollar access on one side of that liquidity pool. A yuan-based stablecoin or a yen-based stablecoin can provide it for Korea or Japan. And you could have deep liquid Forex markets with real-time price discovery that kind of mitigates the arbitrage opportunity, which is great for finance people, not great for the users of the respective fiat currencies. So creating that transparency, I think, is what this tech is all about. I think it's a weird way to get there. I wouldn't have predicted this myself 10 years ago when I started going down this rabbit hole. But I do think there's a lot of room for us to collaborate with other nations or other governmental entities, regardless of whether it's public-private partnership, whether it's another publicly issued stablecoin that looks like our stable token, whether it's a CBDC. I mean, there's a lot of room there to kind of figure out the direction.
Yeah, certainly seems like that's the way Europe is going.
It seems like you guys had a pretty decent, I guess, idea of where you wanted to launch this thing. Arbitrum, Optimism Base, Polygon, Avalanche, Ethereum, Solana, maybe. I think there were 7, or maybe I missed one. How did you guys come up with this idea of where you wanted to launch the stablecoin? Is it stable token to you guys or stable coin?
So we use the term stable token,
Okay.
2 reasons. One is we like in our state to think about, and I think this will be formalized maybe through legislation if it's not already. We just everything we do is public, right? So take one step back there. The Select Committee, which is the branch of the state legislature, the Select Committee on Blockchain, Financial Technology, and Digital Innovation Technology, bit of a mouthful. They're the ones who create these laws. One of the things they're looking at is putting together a token taxonomy bill that will address some of the descriptions of these things that we created, almost 10 years ago, that maybe some of it's been adopted by industry, some hasn't. Maybe want to conform with different pieces of federal legislation as that comes to fruition, like the RFIA and the market structure bills. So more to come on that, but one of the ways the state thinks about coin versus token is coin is something like a cryptocurrency that has an intrinsic value to it, while a token is a proxy for a real world asset, whether that's a stable token as a proxy for a dollar and cash equivalents, whether that's RWAs, which are now not in supremely active conversation, but certainly within the lens of the legislature. These are all the things we're talking about now. So that is the stable token. Although, stable coin is certainly a fairly analogous term. That's the answer to that one.
And then as far as the chain selection, I'm curious to understand what the process was, because I think inside the microcosm of crypto is a lot around the vibes, the grants, what tech makes sense.
I could assure you this is not grant or vibes based for the state government working on this.
That's what I was thinking.
It's a short question with a bit of detail behind it. So we have from that select committee a encouragement to be multi-chain and tech agnostic. When we started this process of chain selection, we did it before we did our procurement process, because we've said if we're going to go and ask vendors to build this for us, we need to have a decent idea of how it might look. Because if we're trying to field requests for proposal on UTXO systems versus account-based systems versus DLTs, it's going to be a lot to handle. And what if the network doesn't work out the way we want it to? Or are we going to embed an entire blockchain selection matrix within an existing evaluation matrix for the vendor? So we said, let's do the blockchain part first. We created a blockchain selection working group. We took about 30 different chains into scope based on market cap or features like privacy, a whole litany of things. And then we created a series of evaluation criteria. First up were several binary criteria. So you had to have those features if you wanted to move forward into scoring. You had to be public and permissionless as a network, but have permissioned onboarding if we needed that. You need to be supported by on-chain analytics firms. You need to have freeze and seize capability for interdiction, and we'll talk more about that, I'm sure, in a minute. And there's one I'm missing. But if you were able to get through all of those, and only half were based on feature set, then we would give scoring to your network, right? And there was just some kind of rote technical criteria, right? What's transaction finality? What's average transaction fee? What's TVL? What's stablecoin TVL? And then, because there is no one perfect metric, right? Daily active addresses is not a perfect metric. That's one of many we're considering. And then even beyond that, we created additional benefits as a criteria, as a category, which is, are you working with other states or governments? Do you have use cases on this network that we could foresee ourselves doing? And then additional kind of constraints or concerns, which is, has the founding team had any kind of legal difficulties? Has this network been compromised in some way, shape, or form? So we looked at 30 different metrics and then created a scoring rubric. And we didn't pick one network. We picked, essentially it was going to be 5. And we said, well, we've got a number of layer 2s in here who scored well, who are on top of Ethereum. So we ended up with 9 candidate blockchains, as we called them. And then we rolled that into our procurement process, looking for vendors to build out a stablecoin. And we said, as long as you have infrastructure that can be deployed on one of these 9 networks, you can submit a bid. So we went through the whole procurement process. And my, original hypothesis was we'd start on one network and then scale from there over time. Because interoperability was a nice to have in our token issuance RFP. It wasn't a mandatory criteria. But when Layer 0 got involved in the bidding process, they were the highest scoring respondent, and they are natively interoperable. So once we brought them online and said, well, we could start with one, but there's really nothing realistically stopping us from being multi-chain out the gate. That is our remit from the legislature. Let's see how far we can get. That allowed us to launch on 7 of our 9 chains out the gate. And then we've also done this blockchain selection exercise on a quarterly refresh based on that interest. So some others, so I believe 𝘬𝘯𝘓, Aptos, 𝘠𝘪𝘴𝘬 have come into scope, and then they'll join 𝘬𝘯 and Stellar as existing candidate blockchains that, you know, were perhaps selected first and then vendors brought on next. So we, you know, Stellar was a candidate since day one. Then we brought on Layer 0. Layer 0 has recently announced support for Stellar. So whichever chains are left, as soon as they're adopted by our mix of token issuance partners, infrastructure with Fireblocks, on-chain analytics, then we will go from there and continue to bring them on.
Yeah. And so, okay, so yeah, let's rewind on that kind of point that you made with regards to, it almost sounded like if you needed to have a chain rollback or something, then that was like a part of the criteria. Maybe you could explain on, like, I forgot the exact terminology, but
freeze and seize.
Freeze and seize. It sounds like that is something that is kind of, it is a part of the traditional financial system. It's also a part of like USDC and USDT, but not part of things like DAI or things like these other kind of more like decentralized stablecoins. But you're talking about it on a chain level, which then would require like sequencer rollbacking or freezing of assets on the chain. How does, like, yeah, how did you guys build that out?
Not quite the chain level. We had to see examples of stable coins issued on chains that had that feature as part of the smart contract, not the chain itself, right? And I would be concerned that I don't think we'd be launching on a chain where any member or validator could start calling back transactions. But at the same time, real world assets means real world concerns. We are a state. We can't have Wyoming stable tokens that are in the hands of malicious actors. You know, North Korea and the Lazarus Group always comes kind of top of mind when they operate in this space. So we need to have protections there. We need to have compliance features, you know, on-chain analytics, open source intelligence, the ability to do freeze and seize, which I'll broadly call interdiction. But those are only for our tokens that are issued, right? And beyond that, this is something because people get a little concerned that a government is able to kind of freeze and seize your tokens. That's always the concern about a CBDC, and one that I share. That's why we worked with the legislature to firm up wording, both from their recommendation to us, as well as within our user agreement and token management rules, to specify the instances in which we can do interdiction. So for a private issuer, they're pretty much their own judge, jury, and executioner. And if you look at Circle's terms of service, there's a whole litany of prohibited transactions and restricted activities. So you can't buy prescription medicine with USDC. You can't pay your taxes with USDC. I told you a few minutes ago, we want people paying their taxes in Wyoming with a stable token, right? So we took great care to say that the Wyoming stable tokens can be used for any lawful purpose. We define that. That's federal law in the US, that's Wyoming state law, and then your respective jurisdiction, right? So if you're not using them for, you know, money laundering, then you're going to be okay. And then beyond that, if there is malicious activity detected, we can only act downstream of a valid court order. So we could do a temporary freeze, that's downstream of a temporary restrictive order, temporary court order, or we can do a full freeze and seize, but that is downstream of a final lawful legal directive. And that is, again, in our rules and user agreement. So I can't wake up on the wrong side of the bed and say, you know, Andy pissed me off, I'm gonna go zap his tokens, or, you know, people call into our public comment period and ask about like social credit scores. We can't do any of that. It's either we have a valid legal document saying a crime was committed, or it's a permitted action, right? So we've done a lot of work to make sure that we've carved that out appropriately, because if we start freezing and seizing people's assets, we get pretty close to constitutional concerns right out the gate.
Yeah, absolutely. And then this is part of a question I wanted to ask you about the separation between money and state. And I think a lot of people look at the relationship that the Federal Reserve has and how it's been politicized, especially as of late. And they're thinking of Bitcoin as almost this escape hatch where now they can kind of exit to this network state and kind of adhere to this monetary policy that they believe is a little bit more just and legitimate than kind of whatever Jerome Powell, chooses to say that month. How do you think about separation between money and state? Do you see stable tokens and government issued stable tokens as a way of kind of, integrating these two more completely, or do you see these as now this kind of burgeoning industry of this really like interesting and diverse kaleidoscope of currencies that can all kind of flow and provide value accrual back to the US dollar as like one united front? How generally do you think about this?
Yeah, so I think the first thing I touch on is that in terms of separation between money and state, states cannot create their own currency. And that's the Constitution. They cannot issue their own coin, right? So we're very prescriptive to make sure we note that, we have a digital asset backed by dollars and cash equivalents, right? So we're not trying to create YO bucks. We certainly see some call it, I guess, criticism or at least questioning about, does this bring us back to the wildcat banking days of the 1800s? And I think it's kind of an inane question, because you think about that period of time, what was the concern? You had all these states issuing their own currency, but you didn't know what it was backed by. And now we're moving to a system where not only will we have monthly attestation reports, we're actually trying to get to real-time attestation. So you always know what's backed by. You're always going to know what's in circulation. You're going to have all of these details. Okay, well, what if I couldn't swap my YO bucks for, the New Hampshire live free or die dollar? Well, if these things are all interoperable on a blockchain, which is how I hope they should work, again, you're removing the concerns that were there in those days 200 years ago, right? So I kind of refute those arguments. I think we're just creating a digital proxy for dollar-denominated assets that can, as you mentioned, get the dollar into circulation on a global basis in a way that is fairly immediate, right? We're on high efficiency networks that settle transactions within seconds, if that. Efficient from a cost perspective, where the fees are super low. We can go cross-border. You have all these efficiencies, and I think that'll be a big boon for the US dollar's hegemony. I really do.
Yeah, totally agree. Last question for you. And this has been a fascinating conversation because you guys have a very different way of looking at things, and it feels like a very justifiable. You guys take your time, you're thoughtful with all the actions that you've taken when it comes to the rollout of this stable token. And it's still at the same time, all of that, even though it's been thoughtful, it's been extremely aggressive and innovative. You guys have done things that no other state in the USA has done. And, this just feels like really core to Wyoming's culture. You guys are pioneers in more ways than one. And so I'm just curious, what is it about Wyoming and Wyoming's people that also just, I think we'd be remiss without mentioning Senator Loomis, who has been just steadfast in her development of infrastructure, state legislature that enables this industry. She's been a big proponent of the Bitcoin strategic reserve, as well as the digital asset stockpile. These things seem to be making their way through the federal legislature. And so I'm just curious, have you had any run-ins with her? How has her leadership been able to help steward this project? And generally, what has been the spirit of the people that has kept the state of Wyoming going?
Well, I think the state has always been an innovator, right? I mean, we talked about the LLCs earlier, first state to give women the right to vote. It really is something in the water here. I'd also note that this is a state that when it has a perspective, there is a bit of a, don't tell me what to do kind of perspective if it's kind of outside the ethos of the state. And one of those I'll mention again with coming back to digital assets is when the state worked on, again, this is before my time, so apologies to get the story a little twisted through that kind of historical lens, but the state was working on recognizing the certain property rights around digital assets and crypto. And they had, the state had a perspective. The UCC had a different perspective, or was developing a different perspective. And I remember a story of legislators receiving a letter about, if you do this, the UCC is going to be out of conformance and yada, yada. Legislature said, well, we're going to do what we think is right for the state. And they did it. And now the UCC has adopted functionally the policies of the state of Wyoming. Yeah. Right. So that's been a big piece of it. And with Senator Loomis, her leadership really has been a great throughput. especially the federal level. But I will note our chairman is Governor Mark Gordon, who has been in that position and signed the preponderance of bills around crypto and digital assets and blockchain. He serves as our chairman, and I'm hard pressed to think we would have someone better in that seat. I mean, if you look at his background, not only is he the governor with a lens for the entire state, he was the treasurer before that, so he understands the kind of the economic remit for the state. He's an entrepreneur and a rancher. And at one point, he worked as a Class B director of the Federal Reserve Bank of Kansas City, right around the time of the 2008 financial crisis. So he had a front row seat to the consolidation that moved some power out from the member banks that were intended to, cater to certain jurisdictions they were established in, and seeing more of that consolidation at the board of directors in DC. So our whole state really, with the leadership and the work of the select committee, there's been a lot that's gone into this. And I think only now are people really coming to realize what's been developed over almost a decade in the state of Wyoming as the federal lens turns more towards digital assets.
Incredible. Anthony and Paula, we really appreciate your time and your work pushing the stablecoin agenda, or the stable token agenda, forward in the state of Wyoming, as well as broadly for our lovely country here, America, and just the general outlook that the stablecoins have put into place in the hearts and minds of those in DC, in New York, and just broadly domestically as well as globally. It's really impacted the perception of digital assets in a very, very positive way, and has really brought the attention of the biggest players in the world on chain. And so we couldn't have done it without you, man, and we appreciate your time today.
Well, thank you for giving me the time of day to share it with you and your audience. We appreciate it.
Yeah. Absolutely. Keep drinking the water.
Anytime.
There's something
Sounds
in the water.
Good. Talk soon.
Thanks, Anthony.
Right, Peace out, man.
Cheers. Bye.
And more states should be.
All right, Rob. Pretty good. Good episode. That was one of my favorite stabled up so far, actually.
Yeah.
I really thought it was. It was just quality.
Yeah, I think so too. I really think they're tapping into something that more states are gonna look at, and they're gonna go follow suit. And so rather than build it out themselves, I think that they should go call the state of Wyoming. Like, states should work together. This is the nature of a united republic. Yeah. So I really think that we're going to start to see this play out. He's talking about international finance and developing a robust foreign exchange of currencies.
Yep.
Man, I really like the idea of states exchanging. Each states don't have the ability to issue their own currencies. They do have the ability to issue a form of the US dollar. That's what they've effectively done. And each state has a treasury that they use to manage capital when they have their citizens pay state taxes. And then they use that for social programs in the state, like education. And I just think having our our state treasuries more efficient, having them borrow against one another, exchange capital, and generate loans that they're issuing to different states. I just think this is going to create a really robust money market and economy for intrastate finance. And I think that occurring on chain is ultimately going to be a lot more verifiable and transparent, and enhance all the benefits that we see in regular finance.
Yeah, and just bring more revenue to the states as well,
Exactly.
as long as rates stay somewhat, anything above like 2 to 3%. So
state treasuries probably are paying bank fees, and they're paying the cost of capital.
Oh yeah.
To traditional banks, and they probably don't need to do that.
No.
And we can lower cost, and we can increase revenue to the states, which ultimately is going to make our states safer. They're going to make our states, educational programs better. Yep. Teachers are going to be better paid. Cops and police officers are going to be better paid. Maybe there's healthcare involved. There's all these programs that just generally we're just, if we're making these things more efficient, we don't have to be paying to some of the waste.
Yeah. All right, guys, we'll take a quick break, and then we'll be back next with the Galaxy Ventures guys, talking about some of the venture outlook in crypto, as well as what we have with the Enso mainnet launch. So be right back in just a sec, and we'll see you guys on the other side. Spotify to start putting video podcasts on Netflix next year.
Oh boy, it's really happening. The roll-up on Netflix.
Yeah, imagine that, eh?
I think, yeah, we're live. Let's go.
Yes, yeah, that would be kind of cool.
That'd be dope.
So, I guess the monad claim went well today. I mean, I don't think anything happened. I think everything's good.
There's just kind of a connect. Like you can.
Did you claim?
Well, I think I connected a wallet and my Twitter, and it gave me a kind of a card. It said my airdrop level is "you're cooked," which wasn't the most bullish thing to hear. You're cooked.
Yo, that's hilarious, dude.
So, I don't know. I have my monad card, which is supposed to be bullish, but I don't have like an amount of monad that I've been attributed.
Okay. I'm gonna try to claim this right now. Lee, I'm throwing it up on the shared screen. I'm gonna see if I can claim this thing. So I'm gonna sign in. Do you need to sign with a wallet?
I think a wallet initially, yes.
Initially, you need a wallet first. I don't even have a wallet on this browser. Oh,
Wow,
scan code to connect
Pretty
Rabbi.
good OPSEC there.
Scan code. Okay, I can scan it. Let's see what happens. You might have to refresh. All right, let's see what happens. Connect Phantom.
All right, I'm going long on ETH.
You're going long on ETH.
Yeah.
It just looks too good. Too good to be true.
Yeah, it does.
Just ready to rip.
Ready to rip.
All right. How do I scan on Phantom Mobile? Let's see. Oh, Monad Claim Portal. Okay, here we go. You can do it on here, I think. Connect. Sign in. Confirm. Accept. Yeah, I don't think this is really working that well. Yeah, they had quite a few issues with Monad today.
Well, apparently there was so much activity.
People
that
always
it
do
took
that
down
stuff.
Privy.
It's like, let's all run to claim the airdrop when it's like available for so long and it's not really a big deal. But we're all gonna rush to claim it.
I mean, they make a lot of noise about it. They make an announcement. You in this day and age, the attention span is so short. It's like, if I'm not doing it right now, I'm not gonna do it.
Yeah. So what are you doing? You're going long on ETH after the whole world got liquidated. You decide that it's your turn.
Yes,
Nice.
exactly.
So are you using Aave?
Yes.
Nice.
I mean, when it comes to a flash crash, I know Lighter was in the news, Hyperliquid in the news, Binance in the news.
I'm trying to figure out this
when it comes to a
market.
flash crash, the quiet is not really too bad. Like the fact that Aave didn't really have a ton of like swarm of attention behind it during a flash crash, I think is bullish for the program.
Yeah. All right. Why don't you talk the folks through what you're seeing out there for a second here, bud?
All right. Well, let's take a look on Aave, core market, Ethereum, mainnet. Oh, let's see, a couple million ETH, 2.5 million ETH supplied, upwards of $10 billion supplied on ETH mainnet in ETH. The variable APY right now is 2.4%. That's super chill. That's to borrow ETH though. We're not going to borrow ETH. We don't want to borrow ETH. That would be going short ETH. We want to borrow stables. It's about the same rate to borrow USDT and USDC. It's 5.67 versus 5.68. It's about the same there. Couple others. USDE is a little bit higher to borrow. Ripple USD is a little bit lower to borrow. A little bit less demand on Ripple USD. Nothing against those guys. So that is what we're looking at. And we're going to continue to work through Aave. We've got a couple of great speakers that are in the background, potentially on a VPN, and sometimes those VPNs give our guys a couple issues. But we're gonna get that. We're gonna get that sorted out. Let's see, what else do we have on the docket? We've got Enso mainnet launch. Also got word, yield basis, which I believe is going to go live on the 4th. That's today, the 14th. Let's see what's going on here. Let's see. Yield basis, TGE, happening on October 15th. Shout out to the guys from Legion. These guys did great. They ran yield basis. It was a very recent round. I don't think you would really consider it an ICO, but the yield basis TGE happening tomorrow, October 15th. Tokens to be distributed by yield basis at 10 a.m. UTC. Spot trading will open 1 hour later at 11 a.m. UTC. Tokens will be airdropped. No need to claim. And Legion will be facilitating this based on all of the attention and activity that they saw from the Legion YB sale. Again, those tokens will be airdropped directly to your deposit wallet. The Rollup did participate in the YB sale. We're pretty stoked. Michael is the previous founder of 𝘗𝘯𝘵, which is obviously still a very influential and relevant market when it comes to stablecoin trading. So that is going to be very, very cool. And we're going to see more of this as we continue. Just token launches left and right. All right, we're gonna get back to longing ETH. It's a pretty insane whipsaw that we've seen over the last few days. Let's see. We're gonna make some things happen. Got transactions being approved. This is what we used to do. For all the OGs out there who remember the early days of the Rollup, go back, watch some of our videos back when we were just getting started, and we had screen shared tutorials of how to use these applications. We would be using applications, using the chain, which is a rare occurrence these days. But we would actually show you guys in real time how to use some of these apps and opportunities that became available.
Yeah, man.
Oh, you're back. Oh, Andy, welcome back to the show.
Wait, what happened when I was gone?
Oh, nothing. Just,
You guys just went long on ETH?
We went long on ETH, and we talked about yield basis TGE tomorrow.
Oh, yeah, that's going to be big. What is the pre-market launched?
Ooh, good question.
It probably is. It's probably trading around $1 billion.
That's exciting. What was the Legion round at?
It was at 200 million.
The quick little 5x for the lads.
Yeah, for anyone who got in, I think it's going to be really good. With no unlocks as well. It's pretty bullish.
All right, so no unlocks. What do we think this thing is going to do on launch?
Probably pump, dude. Oh wow, Bitcoin's ripping, dude.
There you go.
Man, Bitcoin's gonna just completely take down that dip that it had yesterday. Quick.
Get with the program, brother. We're going long.
Wow, Bitcoin looks great, man.
You own any Bitcoin?
Barely.
Barely.
All right, guys. I think we're just waiting for the Galaxy folks. I think we may have to push them. Just some firewall stuff that we deal with these institutional folk. It's pretty common, actually, unfortunately. But yeah, ETH 113267, pretty damn good. Not too shabby, I'd say.
Not at all.
I got some stuff that I want to talk about in the meantime, since I think we're gonna. I think we're gonna just skip to Connor and the Enso guys.
Okay.
What's the Aave situation looking like over there?
Yeah, we're making transactions. You know, we've got proper OPSEC here at the Rollup. So
Yeah, do we?
we've got to approve on a few different fronts.
Nice. Yeah, I'm gonna pull up a couple tweets. I think
Yeah, go for it.
there's some good ones here. This one from the Limitless guy was absolutely insane. Binance is getting cooked right now, really bad.
Again, framework guys called it. It's so funny, dude. When yesterday, you know, they talked about like, okay, well, when they initially saw the market crashing, you know, it's like generally long-term time horizons, everything's okay, great, sure. But it's that, you know, after you kind of get the initial reaction out of the way, it's like, okay, well, what are we buying? I asked them like, what was the conclusion from that conversation? And they were like, yeah, what do you want? Just fill out the form, ticker, entry, exit, stop loss, take profit. Fill out the form.
No way.
And
Yeah, that's what they said. I mean, they asked if we want anything.
if we want the entry, right? But I think just the follow-up to that would have been, yeah, well, because those guys are so bearish. Binance, lack of disclosures, lack of transparency.
Yeah.
All right, so, you know, when are we shorting BNB? What's the entry?
Well, I don't really think that's a great call. But this guy that we're about to show on the screen, he did short it and called it, and he was because of this tweet. So I'm gonna pull his tweet up now. And yeah, it's pretty intense. From CJ, the founder of Limitless.
Let's get it up on the screen.
Yeah, it's coming. Man, the market looks great. That was the retest for Bitcoin, I think. I'm not sure.
That was sort of the strategy here, was that, yeah, you know, we obviously dumped. Bitcoin dipped a little bit back under 110, closer to 109. And you do get a little bit of a retest, and you want to make sure that confirms that it's a retest and it's not like a full sweep and another leg lower. But I think, I mean, I'm curious about your opinion. You'd say that we've confirmed this is a retest and not a sweep lower? Now
I
we're
think so.
bouncing. Yeah, I think so too.
I mean, we'll see. But when you get, I mean, Jerome Powell just said that they're going to start cutting back on QT. Yep. Which is huge. Wow, the Binance founder just blocked this guy, CJ. All right, let's get this up on the screen, and we'll talk through this one. So, offer from Binance to list Limitless token. 1% airdrop on day one, alpha listing. 3% further airdrops in 6 months. 1% for marketing at Binance, full discretion. 100% TVL for token pool on PancakeSwap. 250K security deposit.
Dude,
3% reserve for BNB HODLer program. 200K worth of tokens at MFN price for Binance affiliate marketers. $2 million BNB security deposit for spot listing. Offer from Coinbase. Build something meaningful on Base.
Dude.
Because you know when you list on like Aerodrome, you get listed on Coinbase now.
That is true, and I expect any centralized exchange that does not do this is going to lose.
Yeah.
And so if Binance is asking all this and Coinbase is just asking that, you can see where you're going to launch, obviously, and that is the nature of retention these days when it comes to listings. I mean, I don't know for sure. I don't have any intel, but I gotta think CJ is going to get sued into an oblivion. Don't you sign like not just NDAs, but like all kinds of things before you get a term sheet like this?
Yeah, I mean, dude, so I guess 2 people are getting fired today. Well, he's been tweeting some crazy stuff.
CJ?
Yeah, so apparently he didn't sign an NDA. And yeah, this guy's going out on like going on a, what do they call it when you're
Revenge tour?
like a scapegoat for the
A
industry.
whistleblower.
He's going full whistleblower vibes.
Yeah.
Yeah.
I can see that.
I mean, yeah, he's just, I mean, yeah. I mean, dude, this is the reality, though. People are fed up with Binance, with all this stuff.
Mm-hmm.
They're not having it anymore. And this tweet just kind of shows it straight up.
Mm-hmm.
Like, it's pretty hardcore.
Oh, yeah.
So, yeah, I mean, we're going to get our boy from Enso up next. He is our next guest, and yeah, we're gonna just take another quick break, and I got a couple more tweets to show on screen, and we'll be right back in like literally 10 seconds. So just be right back for you guys. So this tweet from Moon I thought was pretty funny, man.
Yeah, what have you got there?
The best time to farm perp dexes is the day after everyone gets liquidated farming perp dexes.
This is kind of the same idea as like you LP when there's not a lot of other liquidity, so you get a bigger share of the rewards.
Oh, I got rinsed, and everyone's probably going to be scarred from, doing this.
Mhm.
And yeah, I mean, it seems like it. So basically, what it sounds like, what matters for the market right now is for ETH to break 5K. And I think that farming perp dexes is it. Like I was talking to, we were talking to Vance and those guys about it, and they thought it was kind of silly, but they thought it was a fun way to like get more hype exposure, basically. If you know what I mean?
That's
Like,
I mean, yes, but that also sounds like what most people who lose their shirt on altcoins say about Bitcoin. Like I'm just trying to stack sats.
I'm trying to stack some
I'm
sats.
just buying shit coins as a way of increasing my Bitcoin exposure, and then
But I mean, I still think the lighter airdrop is going to be pretty massive, to be honest.
I think so too. And you think there's still time to deposit and farm? They haven't done like snapshots yet.
No, I mean, they just left mainnet beta. Lighter did. So I got to open up variational, Lighter, maybe one or two other Specifica. I think it's worth it. I think everyone's got washed. I mean, literally just 1x strategies. Just
where did you originate this idea? Did you hear it from someone, or was this just a breakthrough that you had?
This is a tweet from Moon.
Oh, I see. Okay, and then this is kind of what, and you don't think this is a joke? This is like actually.
No, he's dead ass being serious. 100% being serious.
Okay.
Yeah. So.
I believe it. I mean, we'll see. I mean, I if you even just deposit, there's probably a baseline airdrop that you can do.
Yeah. XEN crypto. These guys come in the stream and they comment XEN Zen crypto gem, and it's like, dude, no one's buying Zen crypto. Sorry, bud. What even is Zen? XEN.
Don't give in. They want you to pull it up.
Zen crypto. Oh my gosh. $7 million fully diluted valuation. Down 100%. Literally says, I've never seen a crypto chart say down 100%. My gosh, dude, what is the state of things? Yeah, I think Connor's going to join here in a sec and roll. And then, yeah.
Great.
So.
It's kind of fun doing stuff on chain when gas is so low.
Yeah, well, it's pretty cheap, isn't it? It's fast. I mean, ETH's going now. Bitcoin's going too.
Yep. Yeah, but also gas spiked when it was supposed to. If it's ever supposed to. Spiked during the flash crash on Friday. Got up to like 250. Hadn't seen gas that high in a long time. What we haven't looked at in a long time is the ultrasound.money chart of the burn.
Yeah.
Where did all of that rhetoric go? Is
I
ETH
don't know.
inflationary? Supply growth 0.66% a year.
Yeah, no, ETH's not deflationary.
No, it's not.
Yeah, no, it's not. That's okay, though.
It's not. But it's okay because it probably shouldn't be.
Why?
Because just deflate, and there's no ETH left.
Yeah, but that's never going to happen, dude.
No, because ETH isn't deflationary.
This guy's going off about Zen. Burned 80,000 Ether, takes 4% of the Ethereum blockchain. Oh my gosh, dude. I'm pretty sure it's a scam.
It sounds like it probably is, yeah.
I'm pretty sure you're talking about a scam here. Yeah, I'm pretty
Chat
sure.
is so funny.
Pretty sure that's a scam. Okay. All right. That is the moon tweet. I think we're just waiting on Connor. I'm gonna take another quick break, and we'll be back for Connor. And I'll see you guys in a sec. And we'll get started up with Connor. Alrighty. Well, Enso launched their mainnet today, so we'll have Connor up here shortly to talk about that. Should be good. And these guys powered a lot of like the Bearer chain stuff. I did think they did some of the plasma pre-deposit stuff. So yeah, should be good.
Bearer chain.
What happened there?
I think that's a question for Connor.
What happened to Bearer? Zabera.
Yeah, Enso is part of the big intense.
Yes. Man, that Soon token, Solana Optimistic Network, dude, ripping.
Yep.
It's up like 10x since August. Crazy run.
Good idea.
All right, guys, we're going to get Connor up last segment of the day, and we got one word to do. So, yeah, it should be good. Should be good. Mainnet season.
Mainnet season. Let's go.
Soon.
Connor's in the deck clowning our team.
Wow, the $10 billion hyper unit whale has officially closed his $500 million short on Bitcoin.
That was the last straw.
Yeah. Let's bring him up.
Yeah,
let's bring Connor up. That is a big, that's probably what this move was just him closing that short.
Could be.
Honestly.
Could be.
I think it probably was. So.
That's the thing. A lot of this occurs in public, and then we draw our own conclusions. We're gonna bring Connor up and draw some conclusions about Enso mainnet. Let's go. There he is.
Connor, what's going on, man?
Good. How are you? Good to see you, man. Thank you for having me.
Dude, are you pretty tired? How are you feeling?
Tired but energized. It's quite rewarding. All the team, I think each person slept 5-6 hours each in the last 3 days. So we're pushing through, but it's went really well. Everyone's very happy with it in the team and those outside. So we're looking forward to next steps.
Yeah, man. I mean, you guys have already been like active in the pre-deposit campaign for like Bearer chain and for some of these other kind of big chain launches. So it's like, this isn't like other mainnet launches where the product and token all goes live at once. It's like the product's already been live. The token has launched.
Yeah.
How is this different from other mainnet launches, from the founder perspective? You guys already obviously had product market fit.
We were actually talking about this morning. We are weirdly enough comfortable with the situation because we've done some massive launches, right?
Yeah.
Like the Bear chain, we moved $3.1 billion in 3 days. We supported Unichain on their launch. We supported Sonic, also Katana, also Plume. So for us, it's more, how is the market going to receive this when we launch a token? Is the validators going to be up there? Are they going to be running? Are they going to be able to handle the traffic? That part we can't control, right? Because it's fully decentralized at that stage. But I would say being able to launch just a token with the network, with the validators, is a lot more simple than launching a whole product of $3.1 billion in 3 days, right? What can go wrong in a token launch in comparison to people's hard-earned cash of $3.1 billion? There's limiting factors at that stage. So I would say this is a lot less troublesome than launching products all the time. And other teams that are launching it both at the same time, it's a bit hard to do both at once. Anyone that does want to launch, I would suggest just launch, products first, get that traction, get the product market fit. And then if you do need a token to decentralize, then do it. But don't decentralize just to decentralize. We were kind of fortunate in that way that we've done the 2 pivots of Enso, been around for 4.5 years. And we generate revenue, we generate a good customer base as well, with over 145 plus revenue. So 145 plus enterprises using us in production as of today. So yeah, to answer your question straight, it's another launch, right? It's just stage 1,
And so for anyone who's unfamiliar, because like you said, you guys have been building for 4.5 years. You were really deep, and I think kind of cut your teeth on the intense meta that was really part of kind of the infrastructure improvements that took place 23, 24. How did you facilitate the $3 billion that you helped move on Buried Chain, the Uni Chain launch that you helped facilitate. What role did you play in those launches?
Yeah, we allow people to just build a front end. People don't need to build smart contracts, don't need to build the on-chain interactions anymore. All they need to do is build a front end, right? What this results in is projects like 𝘰𝘰𝘮𝘭𝘵, which is a Buried Chain launch, saying, hey, I want to have incentive campaigns of $3.1 billion going from Ethereum and all these different chains into over 80 plus different DeFi combinations on day one in DeFi. So what in Buried Chain? Excuse me, I've not really slept much the last days, you know. It's good.
I could tell, dude.
The reality is that 80 different unique DeFi combinations are brand new protocols that have just been created, right? So let's say 𝘗𝘠𝘠𝘠, let's say EtherFi was also on there, let's say Concrete, etc., 𝘱𝘭𝘠𝘵𝘠, to be able to interact with these protocols. And then also saying, hey, I want to do lend, I want to borrow, I want to leverage this. I want to then also enter one-sided liquidity and also enter vol, interchain, quite frankly, wasn't really there at that stage in terms of usage. And we kind of supported on that. So what we done was we built all these on-chain integrations, combined all these together into one simple part. So people could just put a UI, say, okay, I want to enter into all these DeFi positions in one transaction. Cool, sweet, done. You want to then do all the APY, TVL, logos, all the data balances. Cool, sweet, done. Similar to Unichain, right? Whenever Uniswap launched, again, Enso's been in the background quite a lot. Not really public facing. That's kind of where we're transitioning now as a company, which ironically we found the gap. I thought the gap was larger from retail understanding to developer understanding. It's a bit less actually once you just simplify it. Like the word choice and tense, you know, I think it's an absolute fabrication of a word made up from nowhere. Like it doesn't make sense to anyone. That's why we call it shortcuts of blockchain, right? Shortcut, you want to build your own thing, so forth, so forth. And yeah, so Unichain said, hey, I have positions on V2 and V3, and I want to migrate them over to this brand new blockchain called Unichain and into V4. But my users, I have billions of TVL and V2 and V3 positions, and it's so hard to redeem, take the underlying, bridge, swap, and also mint into V4. Do that all within transaction. So all of this was powered by Enso, and it's interesting because now that people don't need to build smart contracts themselves, they don't need to build all these on-chain integrations. Which, by the way, we didn't even realize how large this problem was. Hey, like, we thought it was just, hey, let's integrate these DeFi protocols. Man, it's like every single project in crypto. We've ironically stumbled on this problem set by having our own issue, by pivoting twice, right? Essentially, how do I read and write on chain? That's literally the problem. How do I read and how do I write on chain? Every single project, no matter what you are, whether you're a DeFi protocol, whether you're an LST, whether you're an AI project, whether you're real world assets, whether you're a stablecoin, whatever it may be, you still have that project, you still have that issue. So even if you come up with a new narrative that gets launched tomorrow, you still need to read and write on chain. And Enso's still that central piece. So it's very interesting to have got to this position.
Does having a token help you with this in the future? Like with incentives or with like the general protocol design? How do you want to kind of use the Enso token to your advantage now?
Yeah, so I think a lot of people launching tokens is, yeah, you probably know how I think. I don't think they need them. I think and I know that we need them. So we have over 250 plus on-chain protocols available through us. So let's say you're a developer and you're like, hey, I want to offer all these smart contracts, all these protocols through one super app. Okay, cool. Say you're a neobank, you want to offer Aave, Morpho, Euler, you would integrate that yourself. Now with Enso, you just integrate one tool and you get access to all of the ecosystem. And what does that look like as of today? Okay, there's 250 plus, but there's over 1,000 plus different blockchains. There's over 43 million smart contracts that live on Ethereum alone. Okay, multiply this by 10x, multiply this by 100x. If we see this as a new financial future and the new internet rails of this whole world, essentially, and we expect just the Enso team to build all these integrations ourselves, we're done. We need to open this up to allow people to add to Enso network, saying, hey, I have a brand new protocol. Let me add it into Enso. I have a new protocol. I have a new blockchain. Let me add it into Enso. So that straight away, whenever they launch, they have all these 145 plus large enterprises using their brand new project or chain from day one. It becomes like a de facto distribution channel. So what the token kind of helps us to do is transition us as a company from building integrations and kind of incentivizing people to add integrations. Now, what's ironic out of this? We've not incentivized anyone to add any integrations. Purely organic. People are like, oh, I've got a new protocol, I need users, I want revenue, and I want distribution. All right, I'm just going to add myself to Enso's infrastructure. Sweet, cool. Win-win situation for everyone. So the network actually starts to become a bit more critical component of this ecosystem. So we have 2,800 devs in Web3. We have 47 million devs in Web2. And if we actually think that we're anywhere mass adoption, guys, like, we need to bit of reality check in this industry. We want to break from the Web3 devs into Web2 devs. Okay, let's say we do that. And we get to 2.8 million devs, right? We 100x of the devs that we have in crypto. And they're all using Enso. Okay, somebody doesn't like, let's say, the 250,000 apps being used in crypto, and they're all using Enso. Just shut down Enso, right? Logically, it makes sense. For everyone in the ecosystem building using Enso, you cut out Enso. So Enso Net Token actually allows us to distribute this across all of the world to ensure that once we do have these 2.8 million devs to even 28 million devs, and we've got millions of apps that are bridging Web2 and Web3 together, you can't bring it down. It's kind of like what Ethereum was back in the day, right? You've got smart contracts, you can't stop. Now you can build applications across any chain of any protocol all within a weekend instead of 6 months.
And how much of the adoption that you've seen on Enso in particular, and granted, there's still a long way to go, how much of this can you attribute to network effects from what you've already built? You have people now coming and finding Enso organically, they're onboarding naturally, adoption is happening. Is this going to start to compound? How can new projects that are looking at the landscape of liquidity out there, and they see, oh, Enso's tapped into Unichain, they're tapped into Parachain, they're tapped into all these ecosystems. What's the benefit that a new project coming on, can they also tap into sort of Enso's ecosystem? How does that process happen?
Spot on. You basically enter an ecosystem that's got group chats with nearly every single team in this whole industry. One, group chats. Number two, you're also getting distribution. So let's say you are a new protocol and you add into Enso Network, you have users from day one. Two, you can generate revenue. Three, you can actually start doing collaborations with the developers inside of the Enso ecosystem. So all compounding. You've got the brand association. We also do like one-on-one developer workshops with teams that want to build. Now, what I find really, really interesting now is we had some ideas of what could be built using Enso. And we do ship these ideas because we know our infra really fast. It's pretty easy for us. Like we built Enso checkout that another team is trying to do. And I think they raised over $47 million and we built it in 4 weeks and they've not shipped it in 3 years, right? We're just like, all right, fine, we'll just do it. Whole new primitive. They talk about it, we'll just do it, right? That stuff, people are now starting to do with Enso, which is really interesting. So there's new ideas I hadn't even thought about. Like full automation in Web3. So you've got like Zapier, drag and drop automation. Okay, they've done that with all different Web3 transactions. I want to lend, I want to borrow, but I want to buy an NFT based upon this off-chain data price. And you're like, whoa, you're bringing all this ecosystem all in one place. And you're like, this has never been done before. This is getting unique. And these guys are raised from like A16Z and Coinbase Ventures. And it's like, okay, let's have a chat. How long did it take you to build this? Oh, it took us a couple of days. And you're like, oh, wow. So your new project, you get access to an ecosystem, you get everything available, and you can test to see if people like your product. Wait, are we actually turning into a real industry and not just tokens where people use products? So yeah, just to iterate, people are able to really just build a product, tap into a new ecosystem. If you're building on top using us, you get access to everything there. We support you. And then two, if you add underneath to Enso, then you get all that distribution of the people using us. So it's kind of like a double-sided win-win for everyone.
Yeah, Connor, I know you're tired, and I know it's been a crazy couple days here, so we'll keep this tight. Curious what's on the docket to fill the end of the year into Q1. What are you guys most prioritizing, internally now that this milestone is behind you?
Yeah, it's a great question. I think we know what works now. We're not a team that had to launch a token and a product at the same time that many people are doing, right? So this is for us to compound and create this, go even more wild. So the next part, what we need to do is not only just support Ethereum, like EVM, we also need support SVM and MVM, right? Because right now we have so many people asking us saying, hey, I want to interact with Solana. I want to interact with the Sui, Sei, Aptos, and so forth. But I want to build using Enso. I don't want to build all my product for EVM with Enso and then another product for that, which they have to do manually. So I think the biggest thing for us really is to open up to every single different type of chain, every single type of language. And honestly, it's the holy grail that everyone spoke about in 2017, 2018, like allowing developers to build on any chain in any language through one tool. That's a big, big objective for us as a company.
Look, man, I'm sure you got your hands full. I just want to say congrats again, and hope that you feel that it's gone well, and that you're proud of the team. And are you going to be in Buenos Aires in November or no?
Will do. Hopefully, I'll see you there. And yeah, I must say, if you don't mind me saying, one, I appreciate you having me on this. Two, I probably am a bit tired, but three, I really want to say that all of the Enso team is really putting the work. Like one of our team members fell asleep, in the office today.
Yeah.
Like we are going hard, and I think for us, this is just again day one. And I always saw people going on Twitter like day one. Oh, what does that mean? Now I really get it. I understand because you're like, oh wow, now I can go from like this to like this can go parabolic in terms of many different elements, but usage. So yeah, I want to say thanks, guys, for having me on today.
Yeah, Connor, I mean,
thank you for coming.
We'll have to have you on in a couple of months, closer to the end of the year, and just see where things are at, and just stay up to date. We appreciate you coming on as well, and I'll definitely see you in Buenos Aires. That should be fun.
That is good, guys. Thank you so much.
All right, buddy.
Cheers, man. See ya.
Man, those mainnet grind sessions, man, those are a different breed.
Oh yeah. One man's destination is another man's journey. And shout out Enso on the journey.
I mean, the launch looks good. Tokens trading around like 300-400 FTV. Think it's gonna do well. It's not too high. Nice start low. May keep pulling back for a bit, but it should kind of level out here. So not financial advice, but we'll see what those guys can do. Bro, it's been a great stream. Great segments.
This was a good one.
So we'll have to get the Galaxy guys on next week.
Yeah.
As we miss them, but otherwise, fantastic.
Felt well-rounded. Feel like I learned something, got a new perspective. We don't have too many state officials.
No.
I don't know if the executive director of the Wyoming Stable Token Commission counts as a state official, but that was an interesting one.
Pretty close.
And I mean, Superstate could be its own state.
Those guys are doing a lot of good work.
Yeah, the type of work they're doing. So great stream, Andy. Thanks as always.
See you guys tomorrow.
Peace.
Much love.